Welcome to Elon Markets webinar series. I am your host Swati Jaiswal, Manager Support Desk at Elon Markets, Credit Academy and Stockage. It's our mission to simplify financial markets, and with this objective, we always try to bring the best brain in financial market for our participant. This special webinar on the topic A to Z of profitable crude oil trading is also a part of offering in trading mentorship program, that is TMP. Welcome all TMP member and all other market enthusiastic who has joined us. Today, your trainer is an awesome personality, Mr. Shaurodeep De. Mr. De, welcome to Elon Markets.
Hi Swati, welcome to all our audience and thank you. I'm delighted to be here with Elon Markets.
So we are super excited to have you in today's webinar. We request you tell us a little bit about yourself, your story, please.
Swati, I started from the beginning as an engineer and then an MBA. And then
Mm-hmm.
actually I worked as a banker and then eventually with my passion to trading, I moved into international trading desks. I was
Mm-hmm.
trading in the ICE exchange, that is Intercontinental Exchange in the Europe, the crude oil derivatives. So I traded there
Mm-hmm.
for quite a few years. And right now, what I'm doing is I'm trading on my own and I'm also mentoring through TMP a lot of people to trade in the Indian market and Indian commodity markets. So
Okay.
this is my whole focus and passion is about technical trading and mentoring also.
All right. So it's great to know about your passion of stock market. I'm sure the listener will have a lot of takeaway from today's webinar. Before I ask you to start with your presentation, let me request our listener to follow few basic rules to make this webinar a super effective. Today, the webinar is from 11 a.m. to 4 p.m., wherein there will be a break for an hour. So accordingly, the presentation is divided into two parts. Before the lunch break, Mr. Dev will be taking the question related to the first part. So my dear listener, if you have any query, you can put your query in the question panel. The same goes for the second part as well. The questions which are not taken, please email all your query related to today's webinar. Uh, we will be reverting back, through an email, and you can put your query to support@elonmarkets.com. You can put it at support@elonmarkets.com, and the answer to your query will be emailed on 5th September, that is coming Thursday, right? The recording of the webinar will be uploaded under elonmarkets.com on Monday, 2nd September, latest by 3 p.m. And we will also email you the steps to access the same along with the presentation which is used by Mr. Day today. And the email would reach your inbox from support@elonmarkets.com. Now, something really important from my team support. My dear listener, we believe our existence only because of you. So you all are important to us. So if you have any query related to today's webinar, kindly put across your query to support@elonmarkets.com, and the answer will be reverted back by 5th September. Okay. And I request Mr. Day to start with the session. So over to you.
Thank you, Swati, and thank you for arranging it in such a nice way. So let us begin. So I'm super excited to let you know about crude oil trading because crude oil is one of the most important commodities traded worldwide. Now, let us understand in every day we have the requirement of energy. You see the bulb or the fan or the AC or the car or the bus, everything runs on energy. And if you look at crude oil, you will find that crude oil has served almost 30% of the global energy needs. So crude oil is a very important uh, commodity if we talk about our daily requirement. Now, let us understand here that what is the extent of crude oil trade that is going on. So, if I ask you that what was the Brent spread or crude oil price, that is CL. CL is the crude oil of WTI. I will explain that later. But the Brent crude oil price, if I go, and that is the global benchmark right now, is around 60. If I take it 59.08. So every day, what happens is that the globe consumes 100 million barrel of crude oil. Now 100 million into 60 is, if it is price, it comes to around, so this is $6 billion of crude oil that is consumed or produced or consumed every day. Now uh, if you take it just 6 billion, and if you multiply with 365 days that we are there, the figure that you get is 6 into 365, which is around 2190 billion, right? Which is basically $2 trillion per year. So at $60 per barrel of crude oil, the global trade is $2 trillion. Indian economy is of the size of close to $2.2 trillion. US economy is close to the size of 16 trillion dollar plus. So you can understand what is the importance of crude oil in context of global trade. Crude oil is the largest traded commodity, and being a very cartel driven supply, cartel means a limited number of countries do the exporting, and all the countries globally actually consume it. So having such a scenario, there is quite a bit of volatility in it. Let us look at the LCO chart, what happened yesterday. You can see that there was huge fall, like from, let me take it down, from a level of 60.40, there was a fall of around 58.60. So almost 2.5% movement. It happened during a period of max to max, I would say, if it is 15 minutes or 1.5 hours. So when the up move also happens this way. This see 58.10 to 59.72, again almost 2.5% move. It happened within time span of couple of hours. So crude oil is a very directionally moving commodity. It gives very decisive moves, and that's why it is a darling for traders. It is a global commodity, and why we are always looking for WTI or uh, Brent, which are the global benchmark, because Indian crude that we trade, and that is represented as, please note down this symbol. Indian crude is represented as MCGBC1. So it is basically, as you can see, crude oil WTI futures India. So it is basically dollar rupee converted price of crude oil. So basically, we follow the crude oil chart of the WTI because there is a reason. If you see, crude oil is traded in MCX, and in MCX, crude oil is traded between 9 in the morning to 11:30 in the night. Now, if you see the global crude oil, it trades from 4 a.m. in the Indian time morning to 2 p.m. or 2 a.m. in the Indian time night. So basically, the global crude oil trades 22 hours, and that's why this is the W Indian crude oil future. And right now, let me go to the WTI crude oil future. This is the trading strategy I will say you. So don't look at this success, failure, all this indicator. Just look at the continuous chart. You can see the continuous price movement. But what happens? Indian crude oil, that MCGBC1, that is just dollar rupee converted price of this crude oil. So what happens is that from 11:30 in the night till 9 a.m. in the morning, uh, that 10 hours almost, or 9.3 hours in which Indian market is closed, the global crude oil is trading. And you can see that there was an up move. And what happened? The next morning, the Indian crude oil had a gap up opening. So this is an important aspect of trading any global commodity. If you talk about gold, if you talk about silver, any global commodity, if you are trading, you always have to look at the global commodity chart, that is this chart, and take your trading decisions, because otherwise what will happen is that whatever moving average, whatever indicator you will be plotting would be wrong, because Indian commodity is not having this time of price action. And that's why if you especially look into the daily time frame chart, the closing price would be different. Here the closing price is this, but in the WTI chart closing price was that. And obviously you are trading something which will depend on WTI. So while trading Indian crude oil or Indian gold or Indian copper or Indian silver, which are global commodities, and just USD INR converted price of this global commodity, you always and always look at not this chart, which is a discontinuous chart. Rather, you look at the global commodity chart, and whatever price is available, suppose here it is a buying signal is coming to you, and you don't look at levels, because this also USD INR also gets fluctuation. See, every day USD INR doesn't fluctuate a lot. During the day it is zero point 0.3, zero point 0.2, some day even less than that. Yes, if the USD INR is moving more than zero point 0.5, then it is a materially big impact. But otherwise, this USD INR, if you are trading intraday, doesn't have that much of effect. But if you are trading intraday, just look at the global commodity chart, and whatever price is available in the MCX price chart, you can actually put your trade according to that. And stop loss is also based on this chart. If you take long trade, suppose here, and if there is a stop loss here, basically what you are doing is that you are putting your stop loss here, and whenever manually you see this level is being hit in WTI, you exit your trade manually in the crude oil, right? Now let me look at this question panel once again, and there are a lot of questions I can see. Only point I'm trying to make is that let me take you through the flow of the presentation. There is a lot of things we need to learn, and we have to actually explain a lot of things, because I guess many of you are completely new to this MCS crude oil trading, and it is a very complex commodity, and it has many aspects to it. So let me what I should do is that I should continue till 12:45, and in last 15 minutes I will take questions about whatever you need to know about the commodity in this uh, towards the end of the session. Now, let me go back to the crude oil trading. See, crude oil being a highly traded global commodity, and it has its own fundamentals and technicals, and it being a very volatile, as you can see, the moves are very sharp, like 53.60 to around 57, and the next day it comes to here, and then it went goes back to the previous level, and then this sharp fall. You can easily understand the kind of volatility it has. So that's why it is very important to understand it as a product. It is very difficult to trade crude oil only based on technicals or only based on fundamentals. Yes, at times it works, but if I take you to the daily chart of crude oil, you will understand. Leave this part because I have shown the recent rates, so it is jumbled out. But you can see crude oil is a very trending market. You see, from a level of 80, it went to 44, that is almost halved. And then from 40, within a few months, I would say within 3 4 months, it went to 66. See, crude oil is not, and see this move from a level of 42, it went to 76. So crude oil is this kind of a product. You have to understand that crude oil is not like copper or paddy or any other normal commodity, because crude oil cannot be stored very easily. There is very limited number of space places where you can store the crude oil. Why? Because once it is inflammable, and it is quite dangerous to store. So there is two way of storing the crude oil. What are they? One, countries have strategic reserves. Like in recent last 3 4 years, you might have heard that Indian government is trying to build in south of India few places where they actually build reservoirs beneath the ground, where they have been storing crude oil for some urgent situation like natural calamity, or there can be some kind of unrest in the Middle East, or there can be some kind of war with our neighbors also. In such scenario, to have a buffer of crude oil, because India imports almost 80% of its oil. So Indian government is what they are trying to do is building a strategic reserve of crude oil, right? So it is very important to understand that if it is requires a government level effort to actually build a reservoir, you can understand the kind of expensiveness of the exercise. And apart from that, there are some floating storages in crude oil. Like, what companies do is that once they explore the oil, they drill and then bring up the oil. If the storage cost, and storage in form of floating storage in large tankers in the ocean, so what they do is that they put the oil, the crude oil, in the big tankers, VLCC, very large carriers, and what they do is they float into the water. And if the storage cost is actually quite low, and if I see, I will talk about the future curve. If the future prices, not the spot price, the future prices in the like 10 months later or 6 months later, future prices are quite high compared to today. What will happen is that they store in floating storages. But still, what you have to understand is that crude oil is a product that cannot be stored very effectively. Like, you can store extra wheat, extra paddy, or extra copper, or extra iron, or extra coal. Crude oil storage is very expensive, and that's why uh, if suppose at present the globe is consuming almost 99 to 100 million barrel of crude oil. Now, the overall global production, if it goes little above 101 also, like 1 million barrel extra per day, the crude oil would crash from 60 to around 40 kind of level. This sensitive is crude oil to the production. So that is why it is very important to understand the bias, because in similar kind of situation, when the price is falling like this, price is rising like this, it is very important. Yes, obviously, as a day trader, you cannot sell here and you can buy here. So you will be, what you will be doing is you will be periodically selling and see, if you are trying to sell at this area every day there was a fall of 2.5%, but the fall was every day you were getting to sell around this area, and every day you were getting profit of 2.5 a day. The range eventually shifts. So basically, the direction in terms of fundamental is important, and obviously we will talk about the technical parameters. Those are applicable into the crude oil. Now, let us understand the crude oil as a product a little bit, and then we will go into who are the biggest suppliers, what are the major issues with the suppliers, what are the growth drivers, everything, right? So, uh, first, let us understand what I said you, that there are various forms of energy. And if you see that oil, natural gas, environmental energy, like from solar power, hydropower, so there are various kind of energies that are consumed. And crude oil and liquefied LNG, that takes around 30% of it. And another important part is, if you see that 90% of this 30%, like I would say that 90% of the crude oil that is actually drilled and brought over the earth, 90% of it is used as a fuel for the vehicles, for transportation. So what happened is that if you look at the globe, in the globe before the 1850s, what happened is that the the main source of energy of any vehicle or industrialization was coal. If you see in the 16th and 17th century, uh, there was industrial revolution in the Western countries, and coal took the place of wood. Earlier, what used to happen is that people used to uh, use dry woods for their energy purposes. But what happens is that, and there were whale oils and all these things. But what happens is that during the 17th and 18th century, coal actually brought the industrial revolution. Now, what happened started happening around 1850s onwards is that there was very rapid industrialization in two countries. One is North America, which is USA, and another is Britain, France, and this kind of region. So at that time, there was a requirement of something more effective than the coal was giving us. So around that time, around 1870s, what happens is that in USA, they discovered coal. They discovered crude oil, and around 1870 1875, US started to produce a lot of crude oil, and crude oil actually became one of the major sources of energy globally, right? So let me show you the map and let me explain you. So what happened is that around 1870, uh, this area, this part of the world started producing a lot of crude oil. And while I go through this, let me explain to you the entire dynamics, how crude oil evolved during the period of time. Right now, this area started producing crude oil, and as the globe was industrializing, the search for crude oil initially started in Russia and the Europe. So they started searching for crude oil, but crude oil was actually not discovered very heavily in this part of the world, that is Europe and Russia. Now, during that time, you can see the country here. That time it was more known as Persia at that point of time. So people started, the explorer started exploring for crude oil around this region. And this was not actually the form right now you see the way this region looked like, because the countries, the boundaries were not shaped up during that time in such a defined way. So what happened is that the Britishers tried to explore crude oil. They have a pact with local tribes that were there ruling there, and they actually struck crude oil there, and they started exploring crude oil there. Now, during the First World War, people understood that around 1930, 13 to 1918, people understood that the people having crude oil actually having an war advantage. So what happened is that soon after the First World War, there was a lot of interest for crude oil in this region. Now, what happened? You can see that Turkey was there, and Turkey was at that time a German ally, and Germany was trying to actually have access to crude oil. So what they did is that Germany built their railroads through Turkey and tried to access this region, which is called Mesopotamia and Iraq, sorry, Syria and Iraq. So at that time, this region was this. What I would say, boundaries were not defined. This area was called a little bit name as Mesopotamia, and at that time, what was Turkey trying is to give access to the Germans through this region to this crude oil. But at that time, the Britishers stepped in because Britishers were well placed in Iran, and with the help of France, they actually destroyed the railroads that were trying to access this area. So the Germans could not get enough oil through Syria and Iraq, and that was a decisive factor in the Second World War. If you see the Second World War, the very reason for defeat of the Germany and the Hitlers were that their warships were driven by coal, and they were a little bit heavy and uh, slow moving. Compared to that, if you see the Britishers have very agile fleet of their navy, because they had access to crude oil, and their oil ships, their ships were fueled by oil, that is petroleum and diesel, and that is why it became very decisive during that time that the crude oil access by the Britishers decided the fate of the Second World War, and Germany was defeated. And due to this result of this Second World War, what happened is that uh, all countries, especially USA, which remained a little bit unscathed during the Second World War, and rest of the world was more devastated. They try to understand that okay, we had to ensure the supply of oil for our industrialization. Why I am telling all you this is that what started during that time is right now all more significant today, because the geopolitics that have shaped this region is very important. Because right now, out of the global 100 million barrel per day consumption, this region, this small region, Syria, Iraq, Iran, Saudis, United Arab Emirates, Qatar, Libya, Algeria, uh, Egypt. So this Middle East, this region is called Middle East. This actually produces 30% of the oil. And what happened is that they were at a time producing almost 40-50% of the global oil. So all the geopolitics, and if you see that though US is producing 12.4 million barrel of crude oil right now, 12.5, US itself consumes more than that. So basically US is a net importer of crude oil, and all major countries are actually importers of crude oil. But this region is a surplus of crude oil, and this region hold around 80% of the proven reserves. So understanding how geopolitics actually shaped the area is very important, because those are equally relevant today. So take it as a story, because these are very important aspects. And when you track crude oil day to day, the fundamentals that you track is the what is happening in this region, what is happening between uh, Iraq and Saudis, what is happening between Iran and Saudis, what is happening between Israel and Jordan and maybe Saudis. So all these things will shape up the way the crude oil prices are moved. So again, coming back to where I left is that so during that time, Saudi was not that much actually explored in terms of oil. But being a very big country in this region, what US did is that started exploring oil in this region. And that time, the this House of Saud, that is the Saudi kingdom, that time was actually established a few years ago by King Abdul Aziz, and he was the founder of this kingdom. And if you see that he actually understood that oil can, he was visionary in that sense, that he understood that whatever the assets in from crude oil, that is going to drive the globe. So they decided that okay, US can be a very powerful country, and around 1945 the Saudis had a pact with the USA, which made that USA will protect them from the fierce tussle of power in this region, and US in exchange will have privileged access to this uh, Saudi oil. And Saudi is the second biggest reservoir of oil. Now, which is the biggest country? A lot of you will be surprised. The biggest oil reserves globally is with the country called Venezuela. But being a communist country, having been a communist country, what is happened is that they never has quite good relation or favorable relation with the USA. And USA being a very one of the biggest consumers and one of the global superpower, they haven't allowed this country to have stabilization during its tenure for last 60 70 years. So though they had such a huge reserve, Venezuela have never been actually been able to actually produce a lot of crude oil. Because if you see right now, they are the biggest reservoir of crude oil, but right now they are producing less than 1 million barrel per day. and US is having very less reserve, but still US is the biggest oil producer in the world. So we will come to this part later, the Venezuela, but let us discuss this Saudi part first. So what happens is that in 1945 the Saudis formed an alliance with the uh, United States, so that United States got good access to this, or privileged access to this huge Saudi oil that was produced. And a company was actually that time established whose name was Saudi Aramco. Saudi Aramco, like uh, Aramco is a Arab American oil company, so that is the name, Saudi Aramco. So Saudi Aramco is still owned by the Saudi Kingdom, and they are trying to list it right now. In the next 1 or 2 years, they have been trying to list it for last 3 4 years, but because of the sheer size of the company and the crude oil prices being having been suppressed for quite some time, they have not been able to do that. Now, let us move on. So, what happened is that uh, the oil price at that time was in 1950s was quite low. So, let me show you a chart in my PPT. I will show you, then you will be able to understand how the oil prices have moved during the point of time. Yeah, look at this chart. See, you can see that during this 1950s, 60s, so this chart, let me explain. So this red line, that is inflation adjusted price. So the globe had inflation. So right now you can see these charts actually merge, because right now the crude price, if it is 40 or $50 per barrel, so it is $50 per barrel around 2018 when the chart was drawn. $50 per barrel, they converge. But before that, the black line is showing the actual price of crude oil. And this red line is showing that what would have been the crude oil price if today's inflation would have been adjusted. Like 100 rupees note would have given you maybe 1,000 bananas 150 years ago. Right now, a 100 rupee note would give you, I would say, maybe at max 17, 18 bananas. So that has been the effect of inflation. So that has been on the crude oil also, right? So if you see that during this time, the crude oil prices were very suppressed, around $3, $4, $3, $4. And what was happening is that the globe was, the industrialized countries were trying to access this cheap oil so that they could actually have the industrialization in their country. But this region was understanding that it is a bad deal for them, so they were looking for resource nationalization rather than the global superpowers like France, British, and the United States taking away their oil. They formed a oil cartel. Initially, these countries, Saudi, Iraq, Iran, and the Venezuela, and one more country was a part of this organization. The OPEC was formed around this point of time in 1960s, and they were trying to actually set the price of crude oil. Now, Saudi had a very steady, I would say, dominance over the crude oil production during that point of time. But let us understand how Iran spanned out. So Iran, what happened is that it ideally was, sorry, initially was, it was governed or ruled by a kingdom called Shah dynasty. So they ruled for some time, but then what happened is that the communist regime, the Today party, actually, they came into power for some years in between. And after that, what happened is that they, they actually tried to nationalize resources. So Iran oil won't be given very easily at a cheap price to British and the United States. So as a peaceful or amicable negotiation for crude oil actually fell, and they, what the Britishers and the United States try to do is that destabilize the countries regime at that point of time, and they actually brought down the government that was there, and the Shah dynasty was again on power. Now, around 72, 73, what happened is that as United States was rapidly industrialization was going on, they were producing as much oil they can. So till this point, 1972, 1973, what happened is that United States has reached peak production, but right now they were importing oils from this region of Middle East. Now, you have to understand here one more important point. Look at this small part of land, that is Israel. So around 1948 or something, after the Second World War, the Israel country here, I think, was established with the kind of borders. But what happens is that in 1967, there was a war. There was a famous war, War of 6 Days, it is called. And this Israel had a preemptive airstrike on Egypt, on Jordan, and yeah, Egypt, Jordan, and the neighboring Syria, so that they actually defeated or demolished the military capacity of these three countries very rapidly, so that they could actually evade any threat, because there was always a tension between the country of Israel and this Palestine. So these two, there was a conflict always there. So this zone was a conflict zone from that point of time. And around 1973, what happened is that the OPEC, the Arab world, actually used oil as the uh, no 1973. First, what happened is that these countries actually tried to attack the Israel from 1967 October 6 Day War to 1973. What happened? They tried to attack this country. This is a famous October War. So Egypt actually, what they did is that they actually tried to this try to attack Israel, and they actually got some advantage because their attack was very sudden, and Egypt had a very organized and strong military at that point of time. So when Israel was actually losing the battle, and it was almost a battle for survival, what happened is that United States stepped in and they actually gave Israel uh, all the ammunition, so that the war was again they actually came a little bit not they were not demolished. Actually, they fought very well with the Egypt. I think they were defending their territory. In this case, they were not actually attacking like the 1967 was, so they could defend their territory and they survived. But this was actually bitter starting of bitterness between the USA and the this region, the OPEC countries. So the OPEC countries decided to treat US a lesson. Now you have might have heard the word oil embargo. So what happened is that during that point of time is that oil prices, you see this 1972 1973, that oil prices from a level of $3 to $4 moved to around a level of 11 to $12 in couple of years. And in today's terms, it went to from a level of $20 to $60. Suddenly it went up. So what happened is that the global economy stalled basically, especially the Europe and USA, because King Faisal was there. King Faisal was a very eminent monarch or king of the Saudi kingdom. So he was leading this idea of oil embargo. So they didn't supply enough oil to the US. So the world economy stalled. Then a person, a diplomat, you might have heard his name, Henry Kissinger, stepped in. And within a couple of years or 2, 3 years, what they did is that they threatened all these countries that, okay, see, US is a very powerful military. So you have used this oil as a tool of political tool, but we are not going to actually leave Israel. So we will help them survive. But if you don't provide your oil, what we can do is that we can try to take your oil resources forcefully. So eventually what happens is that King Faisal was who was uh, little that time quite a wise I would say monarch. He understood the situation, and the oil embargo was actually lifted, and slowly situation became a little bit normalization. But what happened around 1978-79 is that there was a revolution in Iran, and the Shah dynasty was thrown out, and a religious republic was formed in this country, Iran. Now, uh, during that time, there were quite strong, actually, uh, bitterness in this region about the presence of a Israel ally like USA in this region. So what happened in this region, that they didn't want actually to allow the US military presence in this region. But what happens is that during this time there was also an internal war, internal I would say there was a war between Iran and Iraq regarding this point of time, and Saudi and Kuwait actually helped Iraq a lot. But what happens is that the Iraq country, as a country, Iraq was very much indebted. Like they have much loan to Kuwait and Saudi, but Iraq at that time, and Saddam Hussein was there, he built a very strong army. So around 1980, 1988, 1989, what happens is that the, actually this Iraq actually owed a lot of money to Kuwait. They tried to invade Kuwait, and that time uh, Gulf War actually broke out because they tried to take over the oil resources. And Saudi actually didn't have that kind of a strong military at that point of time. And again, the oil price started rising. If I go to the chart, you will see that during this Gulf War period time, the oil went to around 40, and this is the period of 125 120 and today's term oil went from suddenly from a region of 60. So again, that was a kind of a situation when US understood that if they wanted to ensure the supply of oil in this region, so they ensured very strong military presence in this region. And again, this Persian Gulf, this area, Gulf of Oman, was full with Western warships. So somehow they actually pushed Iraq back, but what allowed this is to build a strong military base in Saudi Arabia at that point of time. So eventually the situation came under control, but what happened is that this region, Iran and Iraq especially, became adversary to the USA. So the oil price after that stabilized a little bit, but here you can see that there is a spike of oil price around 2001. So what happened at that point of time is that there was a 9/11 attack into the USA, and during the 9/11 attack, what happened is that uh, uh, two twin towers were blasted, and then 19 out of sorry 15 out of those 19 attackers were found to be hailing from Saudi. And actually Saudi was a little bit embarrassed because they were a little bit they were having an alliance with USA in this region. So there was a situation like that, and then after that the George Bush Jr. attacked Iran because he said that there was a weapon of mass destruction in Iraq, so they attacked Afghanistan. So this whole area became again war prone, and again due to the subprime bubble that was building around, the global demand for oil went up a lot. Global demand for oil went up a lot, and that pushed oil prices from the very beginning of 2000 around 30-40 dollars to, and here at that time also a dot-com crash in 2001. So around 30-40 dollars to $140 in 3-4 years, from 2002 to 2007, I would say, the or 2008, oil price went very much high during that point of time. Now, during the whole time, what has happening is that after peaking US oil production around 10 million barrel per day, US production started declining and it went to maximum 5-6 million barrel per day. And the globe was entirely dependent on this because they were the oil exporter, and the oil demand was increasing year after year, and this region was actually giving oil to the whole world. And this was also a decade of China became a very energy hungry because economy during that time. India became an energy hungry that time. So what happened is that they actually provided oil to this region like India, China, and they actually earned a lot of money through this because they have resentment about US presence here due to Israel, and they were happy supplying oil to uh, countries like India and China, which they didn't consider that much adversary to them at this point of time. Now, I should not go deep into it, but you should understand here that Iran and Saudi Arabia has two different kind of ideological positions in regarding some issues, and that's why generally the Saudis and the Irans are uh, always adversary to each other, have been always adversary to each other, having enmity to each other. Like Iran is not very favorable to Saudi, and Saudi is not being favorable to Iran. Now understand, the Saudi being alliance of the USA, that also increases the bitterness. Now, if you see that Iran tried to build its nuclear program, and that due to that, the entire production was sanctioned of oil production was sanctioned by US in this area. Now, if you look at the Middle East geopolitics, you will find that this Yemen is the area where a lot of conflict goes on. You have to understand why. See, Saudi is basically a landlocked country. They don't have access to this Mediterranean Sea to send oil directly to this European nations, right? How they can send oil to India and China? They have to. This is Saudi Arabia. They have to take the oil through this Gulf of Persian Gulf or Gulf of Oman, or they have to take the oil through the Red Sea and the Gulf of Aden and take to the Arabian Sea and take to India and China. Now, the most global conflicts are happening around this region. The Gulf of Aden is here, and this is Gulf. This is the Strait of Hormuz. This is called the Strait of Hormuz. This small area. So at the narrowest juncture, it is only 11 kilometer or 11 miles wide. So it is very easy, even though that the military capacity of US or Saudi would be quite stronger, but it is very easy to for Iran to destroy few warships of or few tankers of its own and actually block this region. It is very easy for Iran to do this, right? And that's why Iran is also trying to, it is said that Iran, Yemen, because if they block this region, then Saudi will be very finding a defeat. So if Iran gains control over this, and that's why Saudi and the Iran both try to influence this region of Yemen. If they have quite steady access to this country, they can actually block the Saudi oil flow from this region. And that's why US presence is there, and they always try to threaten Iran because they know that even if Saudi is producing such big amount of oil, If these two areas are blocked, the globe will be starved out of oil and energy prices would go quite higher if Iran gets control of this or this region. So this is the major conflict zone of uh, Iran. And also you would understand that due to unstable regime, Venezuela has been many a times actually influenced by US coups and other things. The Venezuela oil production has never reached its potential. It used to be 2.5 million barrel per day, and right now it is just below 1 million barrel per day. Cannot provide. They are importing oil. They're they are having the highest reserve of the oil globally, but still they are importing the oil. And this Libya is a country which was Gaddafi was ruling as a ruler, who was also again very anti-USA. But what happens is that after Gaddafi is gone, uh, this area is again a lot of conflict is there. Nigeria, again a lot of conflict is there. So this Libya and this Nigeria, these regions are producing much less oil than they should potentially be producing, and that is why it is not the global oil supply is not that huge compared to the present demand, and that's why prices are not crashing actually. Now this is the first part of the oil story that was till 2008. Now 2008, due to this 9/11 attacks and little bit bitterness of the US with the Saudis, Saudi US tried to actually move away from its oil supply from this Middle East region, and they tried to produce much oil of their own. Now, let me actually go back a little bit about the oil, its nature, a little bit. Then I will be able to explain you in a better way that how the oil has played a significant role after 2000, maybe 12 or 13. Then you will be able to understand. So all this information that I am trying to tell you is all put into the form of all the slides. Obviously I am not going through all the slides. The information is there, because if I go slide by slide, you won't get the actual story of that I am trying to deliver. The way I am trying to deliver is I am trying to give you the holistic picture, and every data point that is related to this is here. Once you go back, you can understand. See, this is the world map of oil export. Right now you can see the Russia is the second biggest producer of oil, 73. But see, it was 2016 figure. The Saudis were uh, actually exporting the biggest amount of oil. And then you can see this Iraq, this Iran, this Kuwait, the UA. This Middle East is the actual global oil supplier giants. And also there is Canada, and also Nigeria was there. But this Nigeria, Venezuela, these countries has actually dropped a huge amount due to the political unrest in this region. Now, let me go back to the very basic first, and let me explain you a few of the things. See, where I left, that OPEC was formed in the initially by five countries: Saudi, Iran, Iraq, Kuwait. They have almost approximately 81.5% proven oil reserves in the world. See, rest of the world is this small amount, and they are having this big amount. And out of these countries, Venezuela is obviously this region, and then this region is Saudi Arabia. But the third biggest reserve globally is with the country called Iran. So Venezuela is having almost 25% of the proven reserve globally. Saudi is having 21.9%, if you can see here. Then uh, uh, Iran 13%, then Iraq 13% again, then Kuwait 8.3%. So you can see how oil rich these regions are, right? And they used to be a swing producer. Like what used to happen is that if global demand is 100 million barrel, Now what they used to do is that they used to produce the rest amount of it. See the balance of supply. So 100 million barrels is global demand. The rest of the globe is producing maybe 68 million. So they would produce 32 million, so that the oil market is not oversupplied. Because I said in the very beginning that oil is something that cannot be stored very effectively. So if you are producing more than this, then oil price will actually collapse. So you can see it here, and you can see, I would like to show you that OPEC is a cartel which allows quota. Like out of this 32 million, all these countries are there. You can see Algeria, Angola, Congo, Ecuador. These are small producer. Okay, Guinea, Gabon. These are very small producer. The big guys are this Iran, Kuwait, and the lion in this group is having the lion's share of production is obviously the Saudi Arabia. So this Iran, uh, Iraq, and Saudi and UAE, these are the biggest producer. And this is 2017 figures. If you come down right now, we can see that the Iraq has actually been increasing production, and this will be significant when we tell you about the story that is relevant after 2012-13, that Iraq has been increasing production. Iran, Iran has been actually forced by the US sanction. The Iran has been forced to cut down its production, and Saudi has been more or less cutting down its production, though their production went up uh, uh, in between. From 2017 went up 2018, but right now they are in a reduction spree, and you can see that they are reducing more and more production. So month on month basis, their production is also declining, and you get all this data from OPEC report. See, there are three major oil regulating agencies globally. One is the OPEC, okay, that is the Middle East region, and another is the EIA. So EIA is US based, but they also track the global oil supply and demand. And third is IEA. So this data is taken from the OPEC tables, OPEC monthly publication. In each month, these three organizations, EIA, OPEC, and IEA, all produce the oil reports, and those are very significant uh, documents in guessing the overall supply and demand of oil. But what you should understand is that in last few years, from 2017, the production is steadily declining. You see, from 32 million barrel to 29.6 million barrel, and this is forced. They are being forced to do that because of the kind of situation that US has created post 2012 and 13. So I will explain to that later. So going back a little bit, let us understand the types of crude oil. See, there are two types of crude oil, two types of segmentation of crude oil. One is sweet oil or sour oil. What is sweet oil? Sweet oil is that crude oil that contains less than 0.5% of sulfur. And that crude oil that is having more than 0.5% of sulfur, that is called the sour grade of crude oil. Now, what happens is that if you are looking at sweet crude oil that is having less sulfur, that requires less refining effort, and it is actually good for producing gasoline. Gasoline is a US term. In India, the same product is known as petrol. And if we are talking about sour crude oil, so a sour crude oil is actually having more amount of sulfur, is ideally made to produce more amount of or better amount of diesel, because diesel generally have more sulfur than the petrol. Now you have to understand one thing, that when we process a barrel of crude oil, it is not that we only produce gasoline, or we only produce the diesel. There is naphtha is produced, benzene is produced, polythene is produced, jet fuels are produced, kerosene is produced. But the way the refineries are created, it is very specific requirement. So generally they can alter this composition, like how much amount of would be diesel, how much about would be gasoline. They can alter a little bit. At times when the diesel demand is high, they can produce little bit more diesel, or when a refinery sees that requirement for the gasoline is higher, they can produce more gasoline. But it cannot be altered to a huge degree. What happened is that if you go back into the history of 1917 80s, which are the countries that got modernized or industrialized that point of time? Obviously the West, the Europe and the uh, USA. So whatever the refineries they that time built was more about treating the sour oil. So right now the modern refineries that are being set up globally, so they are being set up in Taiwan, in Korea, in Saudi Arabia and India, like Reliance. So all these new refineries that are being set up are quite high tech, and they are they can actually treat multiple variants of oils. They can treat a very bad sulfur content oil also. They can produce a lower sulfur content because they are complex refineries. They can treat anything, and that's why their margin is quite higher. But the earlier refineries that were built, they were more actually built in a way that can treat the heavy and heavy, I will come there, heavy and sour Middle East oil, because Middle East oil is basically a more heavy and a sour oil. So what is light and heavy? So what is crude oil? Crude oil is like the all the animals and the plants that buried into the ground for millions of years, and due to the heat and temperature they became petroleum product, right? Now if they are basically hydrocarbons. So basically if the hydrocarbon chain is quite long, someone having a science background would understand that hydrocarbons are having carbon chains. So if the carbon chains are quite large, then obviously it is called a heavy oil. It is based on that if it floats on water or not. So a heavy hydrocarbon, what would it do is that it will sink when you put it into the water, it will sink towards the bottom of the beaker. But when you are treating a light crude oil, it would float over the water. So again, a higher carbon chain is difficult to break. So higher carbon chain heavy crude oil would require more processing compared to a lower carbon chain light crude oil. So again, due to this reason, a crude oil which is sweet, that is less sulfur, and light, that is smaller number of carbon chain, would have higher price in generally. And a heavy crude, if I tell you, a heavy crude which is having higher carbon chain and more sour, which is having a higher sulfur content, would have a quite a huge bit of uh, require more bit of processing. And that's why what will happen is that this will be a little bit cheaper compared to a sweet and uh, compared to a sweet and light oil. Now, mostly this crude oil is extracted from wells within the land or in the ocean. Now, this was the conventional way of lifting oil, right? Now, I will go to the newer variant of oil that is being extracted nowadays. But before that, let me tell you a little bit about the crack margin. What is crack margin? The difference, because see, crude oil is processed to produce the Brent and the, sorry, crude oil is processed to produce the gasoline and the diesel. Now, the difference between the price of crude oil and the products that is taken out of it is called the crack margin. Now what globally is done is that the crack margin, that is the difference between, there are two major variants of crude oil. One is the Brent and the WTI. I will come to that later. But what happens is that the difference between the products and the and the in raw material is traded globally. And when we trade, the difference between RBOB, this is the RBOB and WTI crack. And as you can see that when the crack margin is going higher, this is the crack margin, this is the crude oil price. When the crack margin, like when the demand for refining product is going higher, generally the crude prices are higher. So when the crack margin is declining, you can see the crude oil prices also declining. But the crack margin being a refined product, and there is always a cost of refined, doesn't dip that much, but crude oil dips a lot. And you can see that the fall in the topping out of the crack margin started earlier, and then actually crude fell a lot. So they can give you an early signal that when a crude price fall can happen. So we should always track the crack margin. If you go to the barchart.com, so if you ask that RBOB is uh, US gasoline, okay? RBOB WTI crack margin. And you can also type barcharts.com, barcharts. So you will get the link for RBOB crack spread, the difference between RBOB and the WTI crack spread. So you can see the RBOB versus gasoline Brent crack spread, and you can see the chart, and you can see the latest contract, you can see. So you can see that how it is actually behaving. So you can look at 3 months chart here, the chart will load here. So if you can look at a 20-year chart, you can look at that also, but that is not of significance. So if you can look at 6 months chart, so you can see, uh, if I make it a full chart, you will be able to understand. So how this RBOB gasoline crack is actually behaving. So if it is falling, the crude prices are falling. So let me show you this part. So if you look at the crude prices grossly falling over the last 3 to 6 months, and if you see the same RBOB gasoline crack from the same July, it is falling. So they give you an idea when the crack margin is falling. You would be generally checking, not day-to-day fluctuation matters, but overall trend matters. See, when it if I from OHLC bar, if I make it a candlestick, or so you can see the overall direction of this crack margin, and you can actually understand that how the crude prices are going up. So if you can see that in last during the May to July period, there was a surge in crack margin. You can see what happened during that time. See this May to June, there was upsurge in oil. So you can from not direct correlation one to one, but if you look at it, you will able to understand that what can be the overall direction in the medium term. So it is very important to crack this uh, track this crack margin. Okay, now various crude benchmarks, again I told you that this is very important. See, WTI is based on US, this region, that is USA, and Brent is that is North Sea. So there are it is based on North Sea, that is in the British area or UK area. This benchmark is there, and there is a Dubai grade. There are multiple grades. To be honest, that there are multiple grades. There are 8-10 kind of significant grades globally. But if you talk to anybody about crude oil, it is based on these two mainly. That is the US, that is WTI, and the North Sea is the which is called the Brent. Now WTI is basically a light and sweet crude oil. It's a specific sulfur content is very low, that is close to zero point 0.2, and the specific gravity is very light, so it is a light and sweet crude. Now this part, this oil, uh, this North Sea, this is not also sour, this is also sweet because its sulfur content is less than zero point 0.5, that is 0.45. Now at this position, what happened is that until 2000, I would say 14 or 15, US was not allowed actually to export oil because US had huge demand for oil, so it was legally prohibited for US to actually export oil. And let me make you see, until 2015 December, when Obama actually lifted the export ban. Now if you can see that where the US oil production is there, you can see it is, this is the Permian basin, this is the west, this is the east coast, and in the north also there are certain amount of oil production area as there, right? So these are wells producing oil in USA, and US refineries are mostly based on this. See, US divides this country in 5 pad, that is pad 1, pad 2, pad 3, pad 4, pad 5. If you want to ignore this terminology, but just understand, in the Gulf Coast and in this East Coast, it is the refineries, major refineries are concentrated. But if you see the production is in the middle also, in this also. Now there is a difficulty for US crude producers. See, US crude were not allowed to shift out of this country, right? And also, whatever crude being produced in these areas had to shift it through this region where the refineries are there, through railroads. And railroads, trust me, is the most expensive way of sending crude oil. So the most expensive is railroad, and the least expensive is the waterborne. So why the refineries were built around the coastline is because they could actually take oil that is coming from the Middle East. If I go back to the map once again. So why it was produced around this region is that whatever oil that could come from Venezuela or Europe or Russia or Middle East, maybe, see how the Middle East has to send oil to here, from this region to this region, through this region, then move this region to this. This is a huge journey, but still the transportation oil through seaborne tankers were much cheaper compared to transporting oil from these provinces to this through railroads. And now there were not enough pipelines also. Pipelines are also quite expensive compared to waterway transportation of oil. So what happened? US crude oil, though it was a very sweet light crude oil, but it has restriction of export. It has higher cost of transportation to the refineries, and that's why, if you see that, always in history the US crude oil has traded at much lower price compared to the Brent. Now Brent is global benchmark for 60% of the oil produced. This Middle East oil is mostly actually uh, traded with the benchmark of Dubai grade, but all the other oil like this and some of the Middle East oil is also benchmarked towards the Brent oil that is produced in the North Sea. But being a little bit more heavier and more sour, what happens is that they serve as a benchmark, and as US crude could not be exported, they actually fell to become a very big global benchmark. And very interesting, this point is that how the WTI Brent difference actually panned out. If you see during the period of post the recession 2008-9, this difference went up to the level of 2025 also. But since 2014 and 2015, when the lift of ban was actually the ban on export was lifted, this difference has actually been coming down. And generally, I'm not asking you to look at this once again. one-to-one correlation basis. But if I just enlarge it a little bit, let me, yeah, let me do it one second. Let me show you the original picture. So if I go to crude, so this is the weekly spread, and I'm opening it through paint. Let me show you. Let me enlarge the picture. Let me enlarge it a little bit. So as you can see that whenever generally the difference between the Brent and WTI is coming down, the price is also coming down. But whenever there is a this spread is also very bullish, generally WTI, and they have gone up with the spread going up. But in recent year, what is happening is that the spread is coming down because US is allowed to now ship its oil globally. So US, and why does US ships its oil globally? Because see, as I told you earlier also, that US oil is US oil is made, US refineries are made to treat heavier and sour crude oil, and they were built earlier. So the light and newer version is sent to other countries like Asia, like India and China, but they take crude oil from Russia, which are, or the Middle East, which are heavier crude oil. Now, what I said you that MCX contract is WTI contract only. So in MCX, crude oil contracts are 100 barrels contract. Now let me show you one thing. So from here you are very clear that you will be generally tracking the WTI Brent spread. So if I type investing.com here, in 30 minutes from now, I will start taking few questions. So please wait patiently. I will answer your questions. Then we'll have the lunch break. So right now, as of yesterday, you can see that this spread has narrowed down to $3-4. And as we have seen, the spread is narrowing, uh, and crude oil is coming down. But as and when you will find that the global oil demand goes up and this spread widening, what you will see that global oil prices also start going up. So very important, please try to keep a track. You don't have to plot them definitely, but you can keep track what is the way the difference is playing out. And if you track the difference, that if it is coming day to day basis from $3 to $4 to $5, you will be very easily able to monitor the way it is behaving. And this kind of chart is actually produced in Bloomberg. So all of you won't be having Bloomberg, but you can actually manually look at how the difference is panning out. Now let me show you once again. Hello. So I have seen a couple of comments here that want to trade strategies. I am coming into strategies, but this is very important part of understanding the crude oil trading. The strategies that we will discuss will be discussed in the second half, when we mostly cover the in the first half the basic details of the crude oil. When we understand, because see, what are the aspects that we are covering? Because as a crude oil trader, you need to track this fundamental part, that is the crack margin, how where it is going, what is where is the Brent and crude oil difference is going, Brent and WTI difference is going. So you need to understand this part. Trading strategies as the technicals would be covered after we uh, track how the fundamental strategies affect the market, and that will be, we will come into second hour. It is a 4 hour webinar. I request you to actually wait patiently, because if you solely depend technical part, it will be very difficult for you, because see, when the larger moves will come, you will need to understand that how long this move can go, because otherwise, based on technical strategies, everybody won't be day trading. So if you want to capture the larger moves, you need to actually understand these aspects also. Okay, so uh, I'm just trying to put this part again, that this fluctuations, sorry, you need to generally track this difference by looking at this crude oil differential. So this is the fundamental part you need to understand, that whenever this gap is shrinking to $3, $4, then crude oil path is going to be lower. But whenever there is the uptick that is going, it moves $5, $6, $8. So crude oil prices are going to remain high and move higher. Now, uh, topic part we have covered. So please understand, when you want to cover the overall scenario of the global market, you need to know who are the major producers. See, Saudi Arabia, Russia, and USA are the biggest producer. So out of 100 million, this is the number, 100 million, that is the production or consumption that is going on. You will see that uh, Saudi is producing around 10 million barrel, US is producing 12 million barrel, and the Russians are producing again 11 million barrel. Now, if we look at the demand side, we would see the biggest consumer is the USA. So it is producing around 12 to 13 million barrel, but it is consuming around 21 million barrel. So they remain a energy deficit country. And why I am trying to explain you is that you will understand that this supply demand dynamics is very important. If you see the crude oil production of Saudi Arabia from 2000 level, it is coming to little bit going up, but it is stabilizing around 10 million barrel. But if you see the Iraq that I was explaining, from a level below 2 million barrel, they are going up to around 4.7 million barrel. So when we track the global supply and demand, it is very important to understand which are the most important countries at this point, which are going to actually help us understand the way crude oil market is going. Now, as I told you that Iran, due to the sanction, their crude oil production is dipping very rapidly. So, as I explained this also in the past, that due to this US sanction, their petroleum production is going down very rapidly, and they are having worse sufferer of US sanction. And Venezuela, as I said, from 3 to 4 million. Venezuela, if you see from a 3 to 4 million barrel, as I said, the production has been going down very sharply. And you can see that the way the country is actually, their oil industry is imploding. Actually, you can see that from a rig count or oil rigs. So the way the oil rigs are going down, that actually decides the overall oil production that is going to come in future. Because if the oil production is, oil rigs are coming down, what we will have is that production coming down. So we track the rig count data for US and globally regularly. Well, I will come to that. You can see the Russian production from 13, it is almost right now 11.5 million barrel. So Russia has been contributing to the production, and you can see the US production, it is touching roof right now. The latest production last week is 12.5 million barrel per week. Now Canadian oil, that is also a global producer, major global producer of oil, their production is going up. So all these countries that I mentioned, these 5 6 countries, you have to understand from the supply side, and the net change, like how the crude oil production in Saudi and the OPEC production as a total. You can see that in the height of 2016-17, their production was more than 33 million barrel. That was there, and it is coming down uh, lower. So, and that affects the crude oil. If you think that you will only look at technical strategy, that is not the way to go. Because see, I will go to a monthly chart, you will able to understand what is the implication. See, this is the reason oil price went from 110 barrel to 28 barrel. As I said that you cannot store crude oil. So this relative production and relative consumption of crude oil by the countries is very important. So please don't jump into the strategy part. The strategy is already there. I have done it for you. You can see, but please wait, because this is both the fundamental part and the technical parts we are covering. And if you think that if you want to miss out the fundamental part, that would be a very wise decision. And I'm pretty sure that there is a lot of information that is going into this webinar. And if you are very new to this subject, it is very difficult to retain everything. And that is why we are giving you the recorded part of it. Because if you revisit the webinar 3-4 times and maybe half an hour uh, at one go, you will be able to grasp, because as an oil trader, you need to track this data. I show you one simple thing. Let me show you a 15-minute chart. Yesterday this fall came, and in my strategy, this yesterday move was not captured, but I personally sold here. Why I sold here? Because I was seeing that market was getting resisted around this level of 63.50. Now what was my logic for selling here is that yesterday Indian GDP came as 5%. It was lowest in 6 years. Now once go let you go through the demand side of the picture, I have seen the major suppliers, that Iran, Iraq, Venezuela, US, these are suppliers. But in the demand side, only two countries are driving 80% of the demand growth. That means if today global oil demand is 100 million barrel per day, and tomorrow it goes to 101, out of this 1 million incremental demand, 0.8 million is driven by two countries only, two countries, India and China. So when Indian GDP came that low, and you cannot sell it with a technical aspect, you have to understand that two countries are driving oil demand only, and one country, India's GDP has slowed down this much. It was an easy sale. So please don't ignore this part that we are discussing. These are very important to trade effectively. I say only based on inventory data, only based on technicals. It is not about how we are going to trade effectively. And we are trading in the TMP group also, that I will explain you later. But please go through the part that I am taking you through. So major players in the supply side we have discussed. Now let us understand this, what I was discussing. See, the oil production, as you can see, the most of the global production is mainly non-OPEC, and OPEC is actually bringing down oil production. Uh, Let me actually show you this part, that India and China are driving 80% of the global demand, and these European countries are shrinking actually, you can see. So the global demand, that India and China are actually, this dark region is China, this is India. So these two countries are basically driving the annual global demand growth. So any bad data, like today, if you can see that a data came in, I will show you. If I go to economic investing.com and I calendar news economic calendar. So if you see that China GDP today, and let me filter it, filter not all countries, clear. clear with major countries, maybe United States, Eurozone, United States, here is India, and here is China. So let me select only these four countries. I'm trying to explain you how to see them. So today is a holiday, but few data still comes into the market. Now you can see in the morning, manufacturing PMI came in even lower. Manufacturing, this is shown in red. So manufacturing PMI, manufacturing accounts for 40% of the Chinese economy. So even if it has come lower than the forecast, then ideally an Indian GDP came yesterday that low, there is a possibility that the overall fundamental picture become weak for Monday. So on Monday, if there is a bounce back into the crude oil, and we see that price stalling somewhere, let me show you. If price bounce back around this region and price stalling somewhere, whenever we will see such a big candle, we will again sell and we will try to actually book profit. So understanding this supply side is very important. And please understand, India and China are the most important aspects of the demand growth. So any economic data releases that we will follow from this region, if it comes that it is bad. And today there is one other important data. See, monthly production of all the countries from Saudi, these are the last month production. So if I find that this OPEC production, that last month, what was the production of OPEC? Uh, Let me go here. So if I see that the production has gone up from July in August, the total figure, then I will have to understand that is a bearish signal. But if it comes that this total OPEC production 29.60, like adding all these figures that will come in the evening, I find that the production has gone down, then that is a bullish signal for me. So this data is going to come today at 8:45 Indian time. Now let me again go back to this phase of the market. This is very important to understand this phase. See, post this crisis, what happens is that crude oil prices stabilized in this region. Now, till now, crude oil was being produced from drilled wells. Now, at this point of time, US started producing a kind of oil which is called tight light oil. Why it is tight? Because these oils were not conventional oil fields. These are oil sands that had rocks, oil rocks, and oil was in them. And there was a new technology called fracking technology. And I will show you here. This data we every week follow and we take trades on this decision. See, you search US weekly production. Uh, Sorry, crude oil production I should have written, but it has shown me this. See, this is the last 30-40 years data is there, but most important is the data from 2013-14. So what is happening is that, see, the crude oil production after peaking around earlier around 10 million barrel per day, and it is not having data of 1973, it has been steadily coming down 6 6 6 5 5 5, and it was steady 5 for decades, couple of decades. Now see, at the start of 2016 2012, you see oil production going up, and by 2014 From a 5 million barrel to 9 million barrel, there was a flood of increase of oil during that point of time, from this point to this. So a country producing 5 million barrel per day for decades, if it suddenly start flooding the market with 8 from 5, and see, from 2012 to right now the production is 12,500, and this is the peak highest production by crude oil by USA. Now understand what is happening here. I will take 15 more minutes and then I will take question from your side. And the second half, we will directly go into the strategies. But this part is very important if you need to understand. So what happened started, this is monthly chart I am showing you. Okay. So what happened is that as the crude oil at that time was hovering around $100 per barrel, US started producing oil from sand, and that is called tight sweet oil. Okay, now this is the where it actually I will show you where this Permian basins were there. Now this chart becomes very important at this point of time. Okay, so let me go back to chart. Now production of this tight sweet oil was tight light sweet oil was at a cost of $80 per barrel. So cost was high. Now you can see here the marginal cost of production of crude oil in various countries. This is $52 for UK, one of the highest. But look at Saudi, Iran, Iraq, all are in 10, 20, 12, 8, 10, $12 per barrel. So what was happening is that they can survive the crude oil lower prices also for some time because their marginal cost of production is so low. Algeria, Libya, even 23, 24. But as we look, United States 36 for normal offshore or onshore oils. But for this light sweet fracking tight oil, it was $80 per barrel. Now, what was happening during that time is that you can see in the past that US was actually taking over the production. So, though the world consumption was growing, what was happening is that the other countries, like the king of the market at that till that time, which was the Saudi Arabia, though India and China was growing very fast, oil consumption globally was growing very fast, they could not actually raise the production to very high. It hovered around 2000, around 10 million barrel only. But what was happening due to this high crude oil prices, this shale oil was profitable. So US kept on producing and taking away market share from the Saudis and the OPEC. Now, Saudi was thinking that, see, I am producing at $10 per barrel and these fellows are producing $80 per barrel. Why don't I take these guys head on and started producing as much as I can? So what will happen? As I said, that oil cannot be stored anywhere. So if the oil price goes up a lot, sorry, oil production goes up a lot, price will crash. And this guy will be out of business within a small amount of time. Now I will show you during that boom time what was happening. Look at this US rig count. So US oil rigs are something that are used for producing oil. Their number of rigs from 250 in 2009 went to around 1600. So their oil rigs started exploding in number because they were thinking, okay, oil will remain $100 per barrel and we will take out market share from Saudi Arabia. So Saudi during this point of time decided that I am not going to restrict any production. And this OPEC meeting in 2000 September, you can see they decided that we are not going to have any quota. We will produce as much as we can so that the price will dip to 40, 50, $60, and we will take the US shale industry out of business, and we will then start producing oil again, and we will take up the market share. So at that time, US Saudi started producing 33 million barrel per day. Oil price from 110, and this was stable for 3-4 years, crashed to around 27, $28 during the time of 2015, 16. So this is the time oil bottomed out here. But this 1.5 years was drastic for Saudis. Why, I would show you. See, what happened is that though the oil prices were declining, US has a system of futures, like their 5 years ahead futures for trading. So what they did is at 70, $80, they booked future for 3-4 years. So even the spot prices came down, they were hedged in the future. So US oil survived. But what happens is that due to this lower, Saudi produced so much oil, and whatever oil US was producing was consuming itself. But Saudi exports most of its oil. OPEC exports most of its oil. Say they could not actually hedge that huge quantity of 5 years production in the future. So they had to bear this uh, lower price. And in response to this huge price shock from 110, what happened? US rig counts came down sharply. But see, US production didn't fail that much. From a peak of around, I would again go to this chart. You can see from a peak of in 2014, from a peak of 9.4 million production, 9.4 it was in 2015 April, their production in till 2016 dropped hardly 1 million barrel, though their rig counts actually from 1600 went to 250, their production went down only by 1 million barrel. Why? Because they shut down all the new wells, but the already profitable and operating wells were producing oils. But this oil crush actually took out the Saudi uh, forex reserve. You can see as the oil price, this is the oil per Brent price, died from 120 to below this 200. Saudi forex reserve from a pre high of 713, 714, 700 billion plus in the sorry, less than 500 it would be. So it came in the realm of, I would say, 450, 480. Okay, so not less than 400, it came in the region of 400, 500 billion. So if Saudi was going to run this oil lower oil price for few years, Saudi understood that they will be run out of forex reserves, because if the 30, $40 barrel price went for quite some time, they will be completely losing their entire reserve. So then in 2016, they urged all the global players, okay, chaliye, let us cut down the oil production a little bit. And this was time in 2016. They struck a deal that they will cut down the oil production. And I will show you how Saudi production has come down till after that point. You can see that from a 33 billion, it has 33 million barrel per day, it is coming down this sharply. Now it is 30, and every year they are cutting. So basically what US is doing is that one second, just a second, I will take 1 minute. Sorry, I am back. So basically, what we track going forward is that every week in the Wednesday when this data is published, we track this data how US production is going up, and each year since then it has been increasing. See, from 8.5, it has in 3 years it has again gone up to 12.5. 4 million barrel they have increased. So what is happening is that whatever oil demand that is getting generated into the globe, that is being taken over by USA. And though US at times and their marginal cost has come down from uh, 80 to 85 dollar per barrel to right now $48 per barrel. So even at present oil price they can survive for quite a bit of time, and they are continuing. So what is happening is that for survival of their economy, the Middle East is actually foregoing production, and the US and the Russia is another important. Every month Russia provides its oil production data, and if you can see that the Russian crude oil production, I will show you, is going up. So every month we track this Russian and OPEC data whenever they come, and as a fundamental analyst, we every week track this US data when they come, and this Canadian data they are also increasing. So basically, what I will trade on a particular day is decided on based on technicals and overall situation news flows on that particular day. And this strategy, you can see the success rate is pretty high. I'm going to give you after I am shown you where it has failed, where it has succeeded. But before that, the important thing that I want to, this is success. I think this should have been green, that we will see that I am going to give you. But if I'm looking at a daily time frame, if I'm looking at a positional trader, and positional trades are very, very important. You can see this kind of move happens over a period of 3 4 months, and every year this is happening, and these are 20% 30% kind of move. So you should understand that what is the overall supply demand scenario that is happening. Demand side, the most important factors are the global GDP that we are going to happen. I will show you here. These are the strategies that I'm going to discuss, but before that, please understand few of the aspects that the global, how the this is the dollar index. Okay, so this is the overall global GDP. So this is this WT, this brown line is the WTI price. So as and when there is a lull in global GDP growth, you can see that the crude oil production is going down. But as and when the global GDP, this dark blue line, is going up, there is a surge in global GDP, especially India and China GDP. You should definitely follow, and US being it consumes almost 20% of the global oil. So anything, any data, economic data, that is PMI, that is uh, if there is GDP data, interest rate data, manufacturing data, any car sales data, anything that is coming on every month, that has effect on crude oil prices over the next 7 8 days. And another is the dollar. Now crude oil being traded in dollar, you can see generally there is a reverse reaction. Now when the blue line is dollar index, when the dollar index is falling below 98 80, you can see the crude oil prices generally going up, because crude oil is traded in dollar. So when the dollar index is falling, that means dollar value is, the worth of $1 is falling, you see crude oil price going up. So these are not like every day you would be trading on this, but this is a, if you are taking a positional trades, and positional trades are big in crude oil, trust me. If it is happening, or if you are a day trader also, if you want to have the sense of direction where crude oil is going over a medium term, trust me, you need to follow these aspects and understand what is happening. And one more, see, recent the crude oil has fallen and gold has gone up and copper has fallen. So basically, you have to track that if the copper prices are going down, then crude prices can go down. And generally, if gold prices are going up, the crude prices are going down. This happened in a recent month, this year also, and I am showing you 2015 also. You can see such a good correlation. And if gold prices are going up and copper prices are falling down, this copper to gold ratio actually comes down and crude oil also comes down. So basically, track copper. If it is coming down, you can be a little bit bearish on a trend basis on the copper. Please follow the gold price if it is going down. Then when gold prices goes down, when grows up, when the economy is weak, and if the economy is being weak, please try to see that if the oil prices can come down. So there are little bit of things I will just like to cover and see. This is the inventory play. So I will discuss in the inventory session. This forward curve also I will discuss, and this seasonality I will also discuss in second half. So major part I have covered. Uh, right now I will be open for question, and the second half, as you want direct trading strategies. One is the inventory play that every week we do, and another is the technical trading strategy that will be covered in the second half. But right now, what I will do is that for next 10-15 minutes, I will take the questions from your side and we will break for the lunch break. Thank you. So I cannot read the past questions. It is very difficult for me to read through all the questions at this point of time. I request you to put forward the question from here on. I am taking the latest question right now. It will be easier for us. And the second session, I will try to complete at least 40 minutes ahead, so that if there is some remaining question also, I can take those question also during that point of time. Yeah. Which crude index should we trade? So, Manish ji, we should trade the MCS crude oil. So if you log into the MCS account, there will be two kind of contracts. One is the full crude oil contract, that is 100 barrel. If the crude is trading at 4,000 rupees per barrel, the contract size is almost 4 lakh rupees. There is a mini contract of 10 barrel. This contract size is 40,000 rupees. Now, crude is a being volatile product. I would say that you please don't trade with a very leveraged position. So if you are new and if you are having lesser capitals, at least have as much capital as the lot size, like have a 40,000 kind of a, or 30,000 capital for trading the 40,000 uh, lot size. And if you are talking about full lot size, like the bigger lot size, 4 lakh, try to at least have 3 lakh of capital. The next question, uh, please just wait for a minute, because there has been a lot of question I want to answer and it is moving away from me. Just wait for a moment, second, let, and when I start you to type, then please put forward next question. Okay. So which crude index we should trade? It is gone. Give list of fundamentals to track for tracking trades. I told you, you have to look at the, see, fundamentals, the inventory specific I will come, but look at the supply and demand in the oil reports, and also the GDP data, the PMI data, and the major central bank decisions like the Fed cutting rates or RBI cutting rates, or China People Bank of China cutting rates, these two. And also track any kind of war news that is coming out of Middle East, because in the Middle East, the geopolitics is very volatile. If there is a kind of a fundamental news coming on that there is a conflict in Yemen and there it is assuming proportion of scale, then please track them, because a conflict in Middle East is actually will bring down the oil supply and threaten the oil supply and potential to raise the price. If there is a missile test by Iran, if there is a missile test by uh, uh, some of the countries in that region, then it is a dangerous news for oil supply. Do we have simple checklist for fundamental analysis of crude? So I said that you have to take look at the GDP data, the PMI data, and the same things I have repeated. Things the GDP data, the PMI data, the interest rate data of 3 4 major countries like Eurozone, China, India, and USA. Now, can we explain the rig counts once again? Rig counts, see, oil is produced out of oil rigs. So if the number of rigs is going down, basically uh, you are having less supply of oil in future. On the other hand, if the oil rigs is going up, so you have higher probability of rigs in future. So rig count data is published in US every evening. I will show you that data, that how you can trade, that is also part of a strategy. How US hedges for shale oil productive 5 years future, because in USA they have 10 years ahead futures also trading. In India you don't have more than 4 months of future, but in US they have, because it is a being hub of a global derivative. 10-year forward crude oil is traded there also. So not only the next month contract, 10-year forward is contract. Please clarify the relationship in copper and gold. So copper is an industrial metal, so it is required in the industry activities. So what happened is that if the economy is slowing down, like we could see that in China, PMI was 49.5, it is less than 50, the manufacturing PMI. So the copper demand would have gone down. Now copper price also, let me show you the copper also, and in future we will hold a similar webinar on copper also, so that you can understand the fundamentals. I will show you the copper. See, global economy is right now slowing down a little bit due to the trade war conflict. So I will show you how the copper has been behaving. This is the daily chart. See, copper has been coming down so sharply for so many days, and it is a kind of almost at a support area of 2.5. Once it breaks, copper can fall even to $2 $2 per ounce or something, that would be trading. But now copper is falling. I will show you gold here also. So gold is prices, as you can see, is going up. Why? Because the economy is slow, so people are running for safety. So if copper is coming down and gold is going up, so copper to gold ratio would be actually falling. Copper is falling, gold is going up, so copper to gold ratio is falling, and simultaneously you can see crude oil also falling. So basically this is showing these arrows, but you can see the crude oil is falling. So basically you have to look at this in macro scale. Again, coming back to the questions. Yeah, the production limit is only decided in the OPEC, Virochanji. So the OPEC decides that crude oil would be production by each country this much. The factor is that Saudi Arabia, being the leader of them, maintains the maximum discipline, and you can see the uh, uh, countries like uh, Iraq, who have been not always been maintaining their quota and actually increasing. Though you have seen in last 3 4 years the OPEC production is coming down, and obviously the US sanction on Iran and Venezuela has a part of it. So you should always have the look at the news flow. If something is coming in form of three major things, one is the US China trade war, because I will show you again. Let me go to this hourly chart. I am going, you see this, there was a super rally in crude oil from 55.70 to around 56.90. So almost 2% rally. Do you know why this happened? And I will show you On that particular day, the gold also fell. See on 29th, gold futures. See on 29th, gold futures fell. Why do you know? I will show you. Those who are thinking that fundamentals is not that much important, you will understand. Sometimes fundamental news is very obvious, like it was yesterday and the day before also. See, US China trade war. Now, US, what is US doing is that US is imposing higher tariffs on Chinese goods. So, global economy is slowing down, and that is why gold is going up. But I am going to news, and on 29th August, you see China keeps calling Trump's bluff. No, no, not this. 29th August. Sure. Calm discussion. This was the headline. Yes, this was the news. Market rally as China calls for calm in trade war. So what happened is that on 26th, if you see that, I am again going back to this chart, that this fall was due to that US. No, let me go to the crude oil chart. See, this fall that was happened earlier that week is 27th around, is that when US and China both actually uh, put new tariffs to their respective exports. But when this this information came in on 29th, oil price had a great rally. So you need to keep track of US-China trade war. You have to keep track on US uh, on the Iranian sanction, and US you have to keep track on the Venezuelan sanction, and you have to keep track if something is happening in Yemen, in Libya, and in these two countries. And how do I keep track? Because I cannot keep track of the news, so I have created an alert. So all of you are supposed to create this alert. Google alert. Now, if I go to Google alert, it allows me to keep an alert. Just look at this. See, all these alerts for me are created. So right now, if I want to create an alert, how I create? Let me create an alert on US trade war. But I don't need to put that, because when I have crude oil price, it covers that. But let me show you. Let me crude oil price. Let me delete. Let me create an alert for you. So crude oil price. Now show options. Go to show options, and as and when it happens, sources automatic, English region, any region, only the best results. No, I will take all results and I will get it sent to my account. Create alerts. Now what it will do is that anything that affects crude oil price would send me into my mailbox. So if I go to my mailbox, I will show you how it do is that. So if I go to Google Alerts, see all these alerts I am getting. And see Google Alerts, sorry, Google Alerts, if I go. See, crude oil price. So all the day it is showing me crude oil price alerts. So I keep this page open while trading, and every 10-15 minutes, whatever news flow it comes, I not always need to look at deeply into it. What I need to do is that I need to look at any major information that is coming on. So if there is a trade war information, if there is a recession interest, it's a mix. Mexico, if there is a weather information that is affecting crude oil demand, everything keeps on coming me as and when it happens. So some update about Arabian crude oil. So this kind of alerts, if I put all, and it will keep on showing. So any news that would be important would be actually available to me. And also what I do is that I follow Donald Trump in the in his for his tweets in the Twitter account. So I if I show you the Twitter account of Donald Trump, you will find, see, many a times he tweets about the trade war. I will show you. He tweets a lot the whole day, I would say. But see, on the Federal Reserve, on the monetary policy, and the G7 meeting, anything about crude oil, I will show you. Just a second. There was a big series of tweet on China, and see, this is the Japanese Shinzo Abe, and that brought down crude oil prices a lot on that particular day and pushed up gold prices. Those who were part of our TMP actually traded gold and silver on that particular day. See, here is trading on trade agreements. Every time he tweets anything, uh, a trade agreement, you will find that market is actually big trade deal with Japan. He's tweeting about it. Trade war with China. This was August 24th. See, the moment he put this August 24th, I will show you how the crude oil behaved on that. And see, crude oil didn't drop in a single whisker on 24th. It allowed you to trade. See, I'm looking at 15-minute candle, and if I go on 24th, you see this was the big first candle that happened. But even if you had shorted at the end of the candle, and 15 minutes is a big enough time for Twitter to sell you alert from 54 to around 1% move you have got. And obviously, actually, if we see that gold we bought around, because we trade gold into the TMP also, the mentorship program on 24th, I will show you. See, that day the news came on around this, and actually we bought gold on this particular day. On this is showing, and it went up a lot the next day also. So that is how following the Trump tweets actually helpful. So 3-4 more minutes, and I will take most of the question in the second half after this. I will take couple of more questions. 1 second. What is TMP? We will discuss that later. Please provide the website links. It is investing.com, sir. In the investing.com, you can see the uh, link for crude oil. What is the relationship UDS and INR with crude oil? See, basically USD INR converted price is crude oil. So suppose WTI is $60. Now rupee, if it is 70, so the crude oil will be at 4200. But now suppose rupee is 60, the same WTI would cross 3600. So if rupee is 60 and WTI is 60, 60 to 60, 3600 is per barrel cost. But if uh, rupee is 70, the same per barrel cost become 4200. So rupee is important in longer term or medium term, but in shorter term, in 2 3 days of trade, rupee doesn't move more than 1%, and crude oil often moves 3 4 5 8%. So I won't say that rupee is that much important. Yes, Aditya copper and crude oil has positive correlation, and copper and gold has negative correlation. US weekly data, I will tell you. See, these manufacturing data, or this jobless claim data, all this data, US consumer confidence report, they come at a random time. You cannot, if you what I do is that when I am in office, I go to news economic calendar, and my when my economic calendar is open, I keep on seeing whatever the data during the day coming on. So it is not possible to uh, pre-plan. Now see, if I see that tomorrow, like if I go to yesterday, so if I was waiting for Indian, I can see in the morning, it is showing me that in the morning it will show me the India GDP data. So I will wait for Indian GDP data to come. Now, if US main data are consumer confidence data, GDP data, uh, PMI data, which comes on first of every month, and the jobless data, the employment data. So these are the important data in US. The interest rate data, these are pre-planned when the interest rate meetings are going to be held. So whenever I see this data, so I will wait for the data, and once the data is out, I will see if the data is bullish or bearish. I will form an opinion. And after that opinion, I will see the price action. So if Indian GDP data was very bearish yesterday, and I have seen that I have come to Nifty. Okay. Uh, if I have seen that, okay, after the Indian GDP data, this kind of a single candle is being formed, then I was pretty sure that after GDP data, I can sell here, because this is an opportunity for me to sell. So I will sell here, because fundamentally I know that India is almost driving 25% of the incremental demand, and if India is slowing down, then global oil demand is going to be hurt, and that's why I will sell, and you can do that way. Okay. Sorry, questions. I will take two more questions and then we will move for lunch break. Uh, So I have noted down what are the important in the slide. So once you go through the slide, you will find that what are the most important data points required. Once we share the slide, those had been, the checklist has been made there into the slide. So don't worry about it, because crude oil, as you know, is an economic specific thing. I'm not able to in a 4 hour time cover all the slides, because there are 75, 78 slides. So each micro thing I'm not able to cover, but I'm covering all the important aspects. But every bit of thing that you require is into the presentation. Once you read the presentation, what are the important data points, you will find there, and you can look for them. Sure. Does it suffices? Yeah. uh, can anyone or few people manipulate price? OPEC is the biggest decider of price. OPEC, Russia, with their comments, they actually move the market. So they are the biggest players. But you and I cannot manipulate the price, because this is a global product. In India, few people trying to manipulate it won't have any effect, because whatever the global price would move, we will move according to the USD INR price. What is the target and stop loss? So target and stop loss per particular trade oriented thing, I said I will be covering in the second half. Please wait. Yogeshwar Raoji. Okay, please wait. How can I get PPT? You will get the PPT on Monday, sir. Don't worry. how to trade that aspects I'm coming. I told you that the first half is more about understanding the fundamental aspects. Few, at least 10-15 minutes of fundamental things are still left that I will cover into the second half, and then I will directly move into the what is the stop loss, what is the target, what is the strategy on those things. MCX part of chart oil, MCX chart for crude oil is not relevant because we don't trade on MCX chart because our charts are discontinued. I don't know if you have missed in the beginning. I said that we follow the global crude oil chart and we do. Moin Ansari ji, please answer. You are asking. What is your question? Can we trade demand data for India and China? Sir, demand data of India and China you get from the OPEC, EIA and IEA report, sir. Every month I will show you. Moinji. Moinji, I am very sorry. Take second. I think you have asked many a times. That's why you said show. See, I will show you. EIA, IEA, and this is the EIA. I think let me open it 1 second. This is the OPEC data. See, you can see the demand from various countries over the years and over the months also. You can see, and they are forecasting the demands of various countries also. So in this, this is a holistic table. But if you look at this reports that you will be finding every month, sir, both OPEC and India and China, both OPEC and EIA and IEA produces this table. So you will find what is the demand growth of India and China. Don't worry, sir. Every data is inside this. This is the rig count. Let us leave it. Let me find out if it is OPEC forecast or non-OPEC supply. I have accumulated this data for you. Just a second. This is the EIA data, and again it is Asia level data. OECD. See China demand growth, China supply growth. See China production is going up, and China demand side is also I think consumption China. You see 14.97. So US is consuming around 21.08 uh, Moinji, and see China is consuming this. India is consuming close to 4.8 million barrels. So you can get all this data, sir. Every month when around 11th or 12th or 15th, between 12 to 15, these three reports comes EIA, IEA, and OPEC. You will get this report in their respective websites, and you can actually get to them. Yeah. So one last question, and then I will move for the lunch break, and we will join. I will explain MC Aditya ji regarding trade related thing. Please wait for a little bit. Uh, please provide a list of data points that I already covered. Any more question? Uh, Rangaswamy sir, very well covered. Thank you, sir. Can we trade demand data for India and China? Sir, yesterday we traded as Indian GDP came down so low, Moinji, we shorted crude oil yesterday. So that is another way of paying the demand data, right? So uh, for overall understanding of the uh, direction of market, you see the OPEC, IEA and EIA report. But if you are going to play the data, look at GDP data release, PMI data release, all those things. No, there is no crude micro lot, Santosh ji. We don't trade Sheikh Farid ji. We don't trade MCX chart because MCX charts are incomplete. I will tell you why. I explained it earlier also, and this is the last question I'm answering, and then I'm moving for the lunch break. See the chart. This is WTI chart. This is complete chart. Now WTI trades 22 hours of day, sir. And Indian price is nothing but USD INR converted price of this WTI price. Now, when I look at to the uh, MCGB C1 is the Indian crude oil, right? Oh, I have Indian crude oil. Now look at this and look at this. What I am putting. You can see the gap, sir, because Indian crude oil is trading only 15 hours. So the closing prices are different and opening prices are different. So all the indicator you put here due to this gap ups and gap downs would go for toss, sir, because indicators are mostly traded based on closing prices. But we don't have any control over closing prices. The global closing prices are the actual closing prices for that day. We are our price is closing here because at 11:30 WTI price is there, and our price is opening here because next day morning 9 a.m. our prices are here. So these are not complete chart. If I go to the CL, that is WTI chart, I get the actual chart. So even so, if the WTI chart actually moves uh, overnight, this is the continuous chart. There is no gap in this chart, you can see. So this is the chart we should follow. Our charts are wrong because our charts are compelled by the fact that whenever the price is being actually broken, opening and closing at 9, we are trading that price, that are not the actual closing and opening price, and that's why those are wrong, sir. Well, thank you all. Thank you all for actually being part of the first half. We will join around 2 p.m. Now 1:23. We have a let us have a break and we will come back. And I will try to have around 30-40 minute question answer session towards the end because I will take 20 minutes in completing the little bit of fundamental that I have left, and then my trading strategies would take maybe 1 hour, and 40 minutes to 50 minutes I will try to take as many questions as we can. Okay. Okay, have a great lunch break. Thanks all of you for being part of it. Hello. Hi everyone. Can you please anyone write in the question box if I'm audible to all of you? Uh, mm, yes. Okay. So thank you. Welcome back. So I know that the first half has been a little bit long session, but the aspect is that crude oil is a vast subject. So it took 5 to 7 years of me to completely understand the product, and I am delivering it in a nutshell to you in a 4 hours webinar. So there will be a little bit data overload at times you may feel, but the idea is to, even if you retain 20% of it through the webinar, it is okay. The important aspect of it is that you have to be an agile news reader to be a very effective crude oil trader. And also, another important aspect is that you have to revisit this webinar 3 4 times, and maybe in bits and pieces, like every time you watch 30 minutes of it, or 4 hours. So maybe 7 8 days you complete once, make notes, and then progress, and then that it will be able to add value to you. So great. I'm quite happy to be back. So right now, few of the aspects of the fundamental part that are left, I will complete, and then I will move to the trading part. Okay. So allow me 20 minutes to complete what of the fundamental that you need to take care of it. Okay. So first of all, someone asked me that, sir, how can I have a idea of where to find the crude oil, the OPEC or EIA report. So OPEC monthly report, if you search here in the Google, it will take you to the monthly oil market report. Okay, in the publication, and there you can actually, once you go there, so see all the oil market reports. This is monthly oil market reports, MOMR of August. It is having the next oil market report would going to come on 12th of see, this came on 16th of August. Next is coming on 11th of September. The date is already there. So next time on 11th, you can actually visit this website. You can bookmark this page. And similarly for EIA and IEA, you can go to EIA monthly oil report. You can search this and you can read this. See, reading, if you are a full-time oil trader, if you want to become a really good oil trader, you have to keep track of it. And see, once you keep on reading this uh, reports every month, reading the whole report, though it may be 100 pages. If I download it right now, it asks me my name and everything. I will show you. It is already stored in my system. So this is the report that is already there. So if though it is a 100-page report, you will find that once you start reading this and you know that what are the columns, because the format is same every month. So once you start reading it, it would take less than 30 minutes to 40 minutes. And once in a month, the data will come on, and you have to actually pay attention to this, because these are the three. There will be minor difference in their estimate of the future demand or the present oil production. You can follow any particular of them, because the overall trend of the report is same for all the reports. There may be someone may be saying that globe is consuming almost 100.1, someone would be saying 100.2. So once you start managing it, it would take maximum 30 to 40 minutes or maximum 1 hour. So you know what are the sections they are there, what are the details that are there. You have to read it and have an idea. Now let me come back to few of the things about the presentation, about the fundamental, and then I will move to detail. First, I will take up the uh, Saudi part. Okay, so let me take it from this slide. See, the oil, all the oil producers and the oil, sorry, I'm actually, yeah. So basic, so all the oil consumers actually report what is the inventory of oil they are having. As I said, that countries have inventories, oil and petroleum product. So basically, if you see the US, though it is consuming 21 million, doesn't produce the whole of it. So what happens is that it imports oil from many of the countries, and Saudi Arabia is the biggest oil exporter. It is the third biggest oil producer, but the oil exporter. So whatever Saudi Arabia does is great impactful to the global oil market. Now, this is the amount of oil. You see, they almost export 7 to 8 million barrel of oil out of 10 million they produce. So this is very significant because you see India consuming about 4.8 million. So 1 million they actually produce themselves and 3.8 they import from the globe. So basically, it is very important to understand that whichever country oil is being produced out of them, only OPEC countries and Russia are majorly oil producers or net oil exporters, okay, and Canada obviously. So basically, if we look that every country reports its oil inventory, and the oil inventory reporting is most ambiguous or opaque in countries like China or countries like India or Asian countries or countries in Middle East, their oil inventory is not reported that transparently. Which country reports oil inventory most transparently? That is the USA. Only US reports week on week the exact amount of inventory they are having. So, apart from the EIA, IEA, and OPEC report that comes on a monthly basis, overall, if we want to see that how the market global inventory is moving, and if obviously inventory is declining, the price of something would go up because people will think that okay, the supply is coming down, so less in stock, so maybe in future people will demand more, so the price would go up. So as this game of keeping oil price actually is moving towards the way forward, what Saudi did is a very smart thing. They, as you can see, see these bars. These are big bars in 2016-17. Their oil export to, you can see this. Their oil export to China is going up very sharply and approaching 2 million barrel per day. Okay. Now, their export to USA from 8 million barrel per day is as low as 0.26 million per day. Just think, US is consuming 21 million. So they are almost sending less oil to USA. What is this happening? Saudi wants, OPEC wants oil price to be $80 per barrel. To balance their budget, they need 84 barrels, $84 per barrel of oil. So what they are doing is that their export to China is increasing, the most opaque market. They don't tell that what is the inventory, and their export to US is declining. So basically, they are creating a sense of deficitness, which is actually not there into the market, but they're creating through the inventory, weekly inventory reports of USA, that they're creating an environment where market may think that okay, there is deficit of oil in the USA, and that is keeping a price little bit higher. So these news flows are very important. You should track it. Okay. Now regarding US, I would like to show you something very important. See, this is the how the US uh, this is crude oil production is increasing, and this is the liquids like natural gas, liquid, everything. But out of uh, this monthly US oil production, another important aspect is that I will show you just a second. See, uh, yeah, this slide. Understand that whatever the increase is happening in US crude oil, this is not the conventional crude oil. See, conventional crude oil is declining. Now, what is increasing here is the 4.96 was 2017, and 2020 OPEC estimate is around 9.1. So what is increasing is US shale oil, or which is called tight light crude oil. Okay, so this part is increasing every year. Now, if you think, if you look at the production of, again, showed you the map of USA. So these are the major five regions of crude oil production in USA. And out of this, you see the Permian Basin. Permian Basin is this one. Let me show you. Yeah, this area is Permian Basin. This area is Permian Basin. So basically, what is happening is that this area is PAT 3 area is Permian Basin. So again, if I go back to the earlier slide, once again. So any news flow regarding the Permian Basin, I have to keep track on. And the rig count in the Permian area, how it is actually affecting, that also I have to uh, keep a note on. And I have to also keep on a monthly basis over how the global rig counts and which major countries the global, like China, like I can see that the rig count is stable in Canada, but the rig count is declining in USA. So I will come to the rig count later, but these are the major things we need to note down from the report. See, natural changes are there. 1051 to 1073 doesn't make a big difference. But this 1051 suddenly goes to 990. If it hadn't happened in 1 year, one particular month, like 1289 would have gone to 1100 in one particular month. That should have very drastic bullish effect on oil. Oil would go up. Now, let us understand the global scenario a little bit, because if we don't understand the global scenario, see how the, as I was saying, production and consumption of oil go hand in hand in globally. If there is a little bit of more oil produced, that is why it is being 60. Let it go little bit down, the oil would, like it happened here. Production dipped for some time, the oil went to 88. You understand, from 40 to 88. So crude oil is such a product. So that is why it is very important to follow the overall supply and demand. Now let us understand how the globe is right now behaving with oil. See, US has an interest in keeping oil price low. Now, all of you have heard about the fact that oil price, oil is going to be redundant after 8-10 years, because due to the pollution factor, because the environmental factor, more and more countries are trying to move towards electric vehicles. Now, electric vehicle presently constitute only 1 to 2%, and I personally, if you ask me, I find it little difficult to imagine that how the globe will in 10 to 15 years uh, completely move to electric vehicles. It is, in my sense, not possible. Why I am saying you? The coal to oil transaction or oil transformation took almost 50, 60 years. And still, oil companies are having so much influence that they are not allowing proper kind of electric cells for vehicles to get generated at this moment. So it is very difficult to believe that 10 years oil will be completely redundant. But you understand one thing, either it is 10 years or 15 years, oil will find much less usage. Now, if you look at the Middle East, the countries are completely dependent on oil for their economy right now. Right now, there is no major alternative industry in any country, I think, except the United Arab Emirates. UAE has developed some country, some industry Dubai based, but not that huge amount. So, and the champion in the Middle East is Saudi Arabia by in terms of money and in terms of global influence. Now, they also understand that the oil is not going to be their cash cow for going long. So, what they are trying to do is that they are trying to list the Saudi Aramco that I said that was formed in 1945 between King Abdul Aziz and the US President Roosevelt at that point of time. So they want to right now sell stakes into the company. They have been trying to sell stakes into the company. They want oil to stabilize around 80 to $90 per barrel so that they get a $2 trillion valuation for this company. They want to sell only 5% of this company for $100 billion. So that will take their crude forex reserve to 100 billion more, that is 600 billion. And as and when the market situation are good, they would keep maybe uh, keep on divesting little amount, so they would have a steady supply of cash, and that's how they can transform their economy, and which obviously will require a little bit of time, because external engineers, external scientists, external IT workers cannot build the economy. So they need a little bit of time to actually have their own engineers, own system in place. So if they can go for the Saudi Aramco IPO, they will have the cushion of time, and a listed company of $2 trillion, they can sell small stakes at times, so that the economic transformation from oil to post oil era, they can transform their economy. They have to build the manufacturing service industry, so they want to do that, and that's why they want a 80 to $90 per barrel oil. So you can see they are cutting their production from 11 million barrel per day, and even if the Iraq is increasing, others are not increasing, they are convincing everybody, please cut oil prices, let us push the oil prices higher so that we can sell the stake in Saudi Aramco. And the another part is Donald Trump. And now Donald Trump, what he has done, he has opened a war front with China in terms of trade tariffs. Now, economy is obviously slowing down. US economy grew 3% plus in the last financial year. And now, when the economy is slowing down, 2% growth was in last quarter, he needs lower oil price to keep the economic engine growing. So, in one front, Saudis want to divest stake in Saudi Aramco. On the other hand, Donald Trump, and because there is an election in the next 1 year, wants the oil price to be little bit lower side so that he can keep on playing this game of trade tariff with China. Now these are very conflicting situation. Saudi, when oil price dropped to this level, I am showing you, And these are important things that you need to understand while trading. Now, let me go to the daily chart. I will explain you. Let me open another window. I think another window. Okay, okay. Let me open another chart window. That will help. Now you see, Saudi Aramco IPO has been tried. They are trying to launch it, but what is happening is that every time oil goes up, Donald Trump is pushing the oil price down. Now, when the oil went there on that particular day, you can see the oil went to around 51. Then Saudi, what they said is that, okay, we are not going to allow oil price to fall like it happened last year. Last year, you can see oil price had fallen this much. And last year economy was good. That's why oil price sustained for quite a bit of time on the upper hand. This time economy is already weak due to China-based trade war. And now what is happening is that oil is already weak, and when they plunge here, then the Saudi intention to actually divest into the Saudi Aramco IPO is going for a toss. So they are saying whenever they come, they will cut aggressively. So next every month they are cutting, and they are going to cut aggressively oil production because they need 65, 60, $70 oil at least for some years to for a few months at least to for the Aramco IPO. And this time they are serious. You know why they are serious? I am telling you, because you see in 2 years from 2017 their oil market share has come down from 33 billion. OPEC market share 33 point something million, it has come down to below 30. Okay, so as in time when goes, US will anyhow take the market share. So if they fail to make the IPO now, it will be very difficult for them. And if really a global recession happens, every 8 10 years a recession happens, if a global recession happen, they will be find it very difficult to divest stake and raise money. So they are trying to push the oil prices higher. So any news you, and see that day what happened, 52, now 57. Within 3 days this rally happened. So you should understand that such a statement by Saudi oil minister, if it comes after a big fall and market is near support region here, if a news come, and what kind of effect it can have, see from 52 it went to around 57.50, so 10% rally, and still prices above that, though whatever weak economic data is coming. So try to understand that. And as I was moving to the Permian basin, see, I very closely follow this website for news. ठीक है? So oilprice.com, sorry. So you can see that out of the US crude oil growth, half of the uh, growth is coming from this Permian basin. So if you go to the oilprice.com, every now and then you will find many news about the Permian basin. Okay. So if I search for Permian basin from, see, so there will be a lot of news about the Permian basin, how the, and there will be a lot of news what is happening in the Permian basin. And that Permian basin in the US, if I go to the map once again, this area, what is happening in this area is utmost important to the global oil supply. The news is important. Okay, and now I will move to two small things about crude oil, uh, which are very important. Okay, one is the seasonality. See, generally crude oil price start rising 5th to April This is the uh, correlation chart or seasonality chart of last 5, 10, 15 years. Okay, you can see. So uh, this blue line is 5 year seasonality. Obviously last 5 years price is coming down a lot, so you can see the 5 year seasonality. 10-year seasonality is the green, is the red line, and 15-year seasonality is the green line. But a same trend you can see is that Feb April the price is going up, Sept October onwards price is going down, and post November December again price is going up. So see, the reason for this is that this is the time when May June happens, US driving season comes in. So that's why a lot of demand for uh, gasoline and diesel are there, and that's why the crude oil demand is also high, and it peaks at around September October, and it then start coming down, and November December onwards, due to the winter the heating demand, because diesel or in a form of heating oil is used for heating, also start moving up. So Nov Dec Jan Fev price is little bit like this flattish, and then Feb April to Sep Oct. So let us look at this in terms of a monthly chart. For some time we will see, one second, or let me go to this chart, or let me go to the weekly chart. See see what I was telling you. Okay, Feb onwards price goes up, and June onwards price start, June July, let me show you. June, July, say pocked around of time, price actually start picking. This year it picked a little bit early. Last year you see, 2008 started, price started in September, October, it picked out and it dropped. The previous year you see 2017, it didn't follow the seasonality. Every year it doesn't follow the seasonality, but you can see the previous year 2016 price started picking up, and again September October around there was a fall. Every year same thing doesn't happen, but most year you will see that Jan February onwards price started picking, and see August September onwards price starting coming down. So it doesn't occur every year, but mostly the seasonality is followed. So keep in mind that this September, October onwards, generally till Feb, prices relatively on the lower side, and this this price start going up after February. Every year it has gone up post February. See, every year. So in the initial part of the year till June at least, try to be a little bit on the bearish bullish side. See, this year also when the market dropped so big, 108 to 80, this year also till I would say, mm, initial few months till April, May, there was early. So Feb to April, there is always a chance. In 2011 also, you can see that there is a bullish possibility. So next Feb, when it comes, you can actually think of trading more on the bullish side, and in the second half of the year, you can trade more on the bearish side. Now, just one more thing is left for this fundamental, and I will definitely move to the technique, move to the trading strategies after that. Two trading strategies are fundamental based only, so I will discuss them one by one. See, this is the last thing that I want to discuss. This is forward curve. So what happens, I said that even if the crude oil prices are low, the future, like every month has a future. Like now we are trading September future. In India, September, October, and November future or December futures are available. But what happens in USA is that December, then 2010, 20 January to December, February, March, April, May, June, 21, 23. matlab every year, every month is traded. So if we place the price of each month, we can have this kind of a curve. Now, this curve where the present price is above the near future price, nearest month price, if the present price is above the nearest, and this is the Brent curve at this point, That means there is a little bit supply uncertainty. What is happening is that recent time US crude oil draws are happening, a lot of inventory draws are happening. I will show you, and that is why present price there is uncertainty is little bit higher. But in the medium term, people think that there will be a recession coming, and the globe is expecting a recession coming days. So the price is very much lower on the till 2022. And if you look at the this is the Brent, this is the WTI, almost similar structure. When this happens is that the trader, suppose you buy, you are a investor, you are a trader, suppose you are a trader, you buy this, next month you can buy at a lower price, next month you can buy at a lower price. So basically present demand is high, future demand is low. So what happens generally is price movement is quite high. But if it had been the other scenario, like suppose this part of the curve is not there, we are starting from here, the present one is lower than the future. So then investor come into play. What they do? So they will buy crude oil at spot at this low 51, and as they see that going forward prices be higher, and if the storage cost, what they can do, they can buy crude oil barrels and they can put it into the tankers and they can let it float around. Now if the difference between present price and 12 months price is higher than the storage cost, insurance cost of this much period, what this is a sure shot profit. So this is called a contango. And when the price is present price is above this future price or the forward month price, this part of the curve is called backwardation. So backwardation price is a lot of price fluctuation, and in the contango price is very much steady and price doesn't move much. So in a contango, traders are a little bit, especially traders like us are a little bit, and now you cannot check contango or backwardation from any source. What you have to see is that you have to Google every week, doodle okay, crude oil forward curve shape, crude oil forward. What I do is that at the end I have access to Bloomberg, but if I wouldn't have, what I have done, if I wouldn't have access to Bloomberg, what I would have done is that I would have typed crude oil forward curve contango backwardation. Okay, so if I type this and if I type this as a news, I will see that what is the shape of the crude oil curve in recent times, and that will add to my understanding of the present scenario in the market. So let me recapitulate that what we have studied so far. We have studied about the major producers right now, that is Russia, USA, Saudis, Iran, Iraq, and Venezuela, which is having but not big player, and Libya, uh, another important player from the supply side. And supply side, what is most important is the shale oil growth, and what is another important is the Permian basin of USA that we need to keep for news. On the demand side, we have to look at the US, the Eurozone growth, the India and China, what are the demand growths happening. So we will be looking at their central bank interest rate cut, because interest rate cut means greater demand in future. So that is bullish. On the other hand, if GDP data is coming low, PMI data is coming low, that are bad news. So we have to track this. Yeah. So I have actually, what I have done is that, see, some of you are worried that where I can find. See, in the investing.com you can find, and I have written down all the data points that you need to follow. So don't, and US consumer confidence data. So all the data points I have summarized here, and how do you find that? Just have a look again. You go investing.com. Okay, let it open. News, and in the news economic calendar. So you will get all the major data that are required. Okay, see, today OPEC crude production is coming, and in a filter, instead of selecting all data, select major countries like as I showed you, China, Eurozone. Maybe you can France and Germany are two big economy. You can select them separately. Maybe India, Japan you need to select because that is a very big country. So Japan GDP everything is required, though it neither grows or degrows much these days. Uh, USA, okay. So these are the countries, and Russia. Let me select Russia also. Russia was one of the major economies in the world. So Russia we select and we apply. And we can find the data every day where, because every day what is the data that is coming tomorrow or this week or next week, what are the data comings, I can wait for the data the way they are going to come. I can have a snap of this data, what data is going to come and what is the most important data. And you see the most important data are here. Non-farm payroll is very important, so it is uh, triple head, relatively less but still important, it has a double head. So you can select through this also. So you can track these data. Geopolitical news, what you need to track, what is happening between Saudi Arabia, Iran, Iraq. Iraq is relatively stable right now, not in news that much, but what is happening in Libya, Venezuela, if there is a conflict brewing up between Palestine and Egypt, or sorry, Israel in that region. So all those, if something is happening in Yemen, you need to track. And regarding sanction, if US is putting more sanction or loosening sanction on Iran, that you have to keep track. Another important part is I will tell you, see, as US is forcing China to actually bring down import of crude oil, but China is still buying oil, crude oil from Iran. China is not obliging to complete sanction on Iran. They bought 1 million barrel per day of crude oil in July from Iran. So they are ignoring to their sanctions a little bit, because earlier Iran used to send oil mostly to India and uh, China only, and little bit of oil they used to send to Europe. But India has been forced, because India is dependent on USA for a lot of things. So India has completely stopped buying oil from Iran. But what is happening is that uh, that China is not avoiding. So if the oil they actually lift sanction on Iran and Iran comes back with its full capacity, then nobody can stop crude oil from going to $30 a barrel again, because Iran's present production has come down from 4.5 to 2.5. So suddenly, if there is an agreement, Iran agrees to show its nuclear plants to US and other things, then suddenly it will be a big shock for oil market. Oil will literally collapse. It will be definitely good for Iran economy, but not for the other oil producer like Saudis and Russia. They will actually feel the heat. So that is the situation we need to take care. So this is from the geopolitical part, the economic data I said, and the opaque and non-opaque report. And create a Google alert. I'm saying again, go Google alert, create an alert, and put, when you create alert, put as it happens, so that you get all the, and put all results, not only the best of the result. It will show you only the best of the, put all results and put the alert there. Okay. So this is how I am completing the fundamental part. It took 20 minutes more than what I said. So maybe we will extend the session by 10 minutes. Don't worry. So what I will do is that next 50 minutes I will complete through the trading strategies. 50 minutes, and last 30-40 minutes I will take as many questions as you have, and even if you have some question unanswered, I will answer them through the mail by Thursday, so don't worry. Now see, as I said you, let me show you the fundamental trading strategies that we are going to discuss right now. The inventory report. Okay, so see, this is the global oil inventory. So this is the monthly inventory of OECD countries. OECD means most of the developed countries are OECD. They consumed almost 60 million barrel out of this 100 million barrel global demand. So their level of stock is very important. See, 2000, this is 5-year average, this big range, 5-year high, 5-year low, and we are running near 5-year average. So the number of days of inventory, which is at 60, which is fair enough, and that is why crude oil is not rallying much. Now, US commercial stock is important. It is at the high of 5 years. See, and US gasoline and this, what is this called, distillate, diesel, that stocks are middle of the range. So US is having plenty of oil. Now, basically, if I go to the oil, this is the oil inventory play. This is very important. Almost every week, this gives very easy trades. So please, please, please follow me. Even if you have lost a little bit attention because a lot of data was coming to you, please refresh your mind, because you have to be very specific on what I'm going to teach from now on. I give each one of you 2-3 minutes of break to regather your mind so that you can understand very very properly or very perfectly what I am going to talk right now. So please try to have a refreshment, put some water. If after lunch you are feeling a little bit sleepy, put some water in your eyes and get back to full attention, because this is very important. This is actionable data. This is not, earlier till now what we have understood is a trend, because we are going to assess the trend based on what we have studied. But right now what I'm trying to do is that I'm trying to give you actionable data. So on the market, actionable strategies. So please open your eyes, put some water in your eyes, drink some water, refresh yourself. I will give you a couple of minutes, and then within 2-3 minutes we will be again back to this. I can see some of the people getting impatient on based on technicals only. So do you think this data that we have discussed is not relevant? Because as a oil trader for last 6, 7 years, I find knowing this information and putting this information is very important to trade. Yesterday, the way I traded crude oil based on was Indian GDP figure, and that was very rewarding also. When the trade war negotiation was again starting with India with China, we had this rally, this 4 day rally. When Saudi made this statement that they are not going to allow crude oil to fall below 50, we had this rally. I don't know that how can someone trade, because everything cannot be captured in technicals. Everything cannot be technical traded captured in technicals. Obviously, technical strategy we are going to discuss, but if you think that you can trade crude oil without these things, then I don't know that only God can help you, because you should be knowing what is happening all around. You know when actually this Saudi Aramco, this oil IPO word happened, then this rally happened, that they were thinking seriously on the IPO front. Oil went from 54 to 60, then it went down, and then they repeated their stance. Oil went up there. So if you don't understand all this, then how should you trade? Because at the end of the day, this is a double bottom in the chartical form. So if you know technical analysis, you can trade anything based on that. So we are not covering only that, because I know that one or two people would be there who are only interested in technicals. But the fact is that there is a lot more opportunity. When you are going to trade something, you should know in and every part about that product, and obviously you capitalize on it, right? So if I talk about India bull housing finance, the drop, phenomenal drop, it is happening only because it is going out of the Nifty. So how do you define it technically? Because you sure shot know that something is going out of Nifty, so a lot of people ETF money would move out of it. People are selling it. So common sense and fundamental knowledge about any product is very important to understand the product. So now, great. Let me get back to the inventory play. Just a second. Yeah, here we are. So next week, I'm showing from next week. See, this is the direct inventory play, the way it is going on. See, every Wednesday morning, 2:30, I'm showing. See, this week, don't look at this week's data, because this week maybe due to holiday it is happening. Let me show you what happens every week. Okay, this week, complete data from 26th August to uh, to now every Wednesday morning. What happens is that the API data comes in. I will show you why it is taking like. I don't know why it is showing at 4:30, but trust me, it is not 4:30. It will come at 2:30 in the night. I will show you in the screenshot that I have captured. Maybe due to weekend it is showing like this, but every week it will come at 2:30 in the evening, at a 2 p.m. in the evening. So every week, so I captured the screenshot on Wednesday, and you can see that by that time at 2 a.m. in the Indian time morning, this data has come out. So this is API inventory data. So API reports inventory data. It only shows the crude oil figure here, right? But actually, this is not all. If I go on Wednesday morning, so Wednesday at 2 a.m., this API data would come. This API inventory data would come. And this is how easy money you will see and you will appreciate. See, this API weekly inventory data would come on 2 a.m. in the morning. There are two agencies in USA who reports oil inventory on a weekly basis. One is API and second is EIA. The EIA is more reliable, API is less reliable. But what happens is that as soon as the data comes, the market reacts to it. So let me show you how the market reacted to this. Let me first show you what the data was. Okay. So let me show you. In the next morning, what I do is that I search API oil inventory in Google. Now look at the steps I am doing here. In the next morning, I am looking at the API data that has come overnight. So I am looking at, I'm expanding it a little bit so that you can understand. Staggering crude oil inventory draw was 11.1 million. As I said, there are three major products of crude oil, two major products. One is crude oil itself, and the major products are gasoline and the distillates, that is diesel. In India, term, petrol and diesel. So from crude oil, what I will have is that if it comes like this, copy this link and paste it here, it will go away. Okay. So now it won't reappear. So 11 million barrel was the draw in crude. But crude inventory in itself is not sufficient for me. I am coming to this sheet. I have to prepare a sheet like this. See, so this was the August 5th week. Last week of August, the data came. So August week 5. So I wrote it down that 11.1 million was the crude oil draw here, right? The same news I will follow. This is this is the best trades in crude oil every week they provide. Okay, so this is the very important. Please look at it. Where is it? Copy here, paste here again, and this will go. So 11.1 million barrel was the crude draw, and see beneath I find that that week reported gasoline draw of 0.349 349 thousand barrel, that is 0.349 billion barrel. Okay, so what I did here is that I wrote down K distillate draw was 0.349. Okay, and 0.349 was gasoline actually. So this figure should have been here. One second, this figure should have been here, and distillate I will see. Distillate fell 2.5 million. So distillate fell minus 2.5. So if there is any build means increase in inventory. If there is draw, then I write it at minus. If there is build, I put it as plus. Now, what happened is that on that particular evening, overnight, what happened is that rally, crude oil showed net draw of 13.94 million, which is huge. Normally, draws or builds are in the realm of 5-6 million. Okay. Now, let us see how the market behave into this. See, this is how the market behaved into this. This is the WTI data that came on 25th. Let me go to the chart itself. This chart. Let me look at the 15-minute chart. The API data came on 25th. Sorry, API data came on 28th. Okay, so let me look at 28th chart. See, this is when the data came on in the night at 2 p.m. See, at 2 p.m. the data came and the market moved higher in the night. This is the time data came at 2 p.m. This is the time data came and market launched and market went high, right, on 28th. Now, in MCX, see what happens. MCGB C1. On 28th, because we opened at 9, when we had a gap up opening. But still, as the data was bullish and the up move was only half a percent, I would say, or 1%, I would say, and there was 14 million barrel draw. Just imagine, normal weeks it is see 5 million, 6 million, 2 million. This kind of draw happens once in a 3 months or once in a 2 month kind of a draw. This is a very big draw. Normally, draws are in the 5 million, 1 million, or build are in this range. Now, this big draw was there, even if by the morning we opened here, and in crude oil terms, we were something around on 28th in the night, we were here. There was see morning we opened around this time. This to this move we were closed. Now we opened around this time, but this was a huge draw, so there was possibility of further rally. The market rallied. You understand? Now in the evening the data came. See what happened. The evening data came. What is the evening data that that came later? Okay, I'm showing you. This week I will show what data came. So on 28th the data came. See, this was the uh, uh, 2 a.m. data, and the morning data came at 8 p.m. and every day, every Wednesday 8 p.m. the EIA data comes. At morning 2 a.m. the API data come. Now see, this 10 million barrel was crude draw. The distillate draw was 0.147 and the gasoline draw was 2.090. Let me put them here. Distillate 2.063 draw. This is 2.090. This figures in green. 10.027. So I put all these things here. This was almost close to this. So data was in line. So what happens is that if the data is in line, generally the market has already rallied. As there was a bearish engulfing candle, market sold off after this. Now let us see what happened the previous week. This data comes every week. You will find how significant this data is. See, the previous week, the EIA, that is the overnight data, reported us that the draw would be only 2.4 million. Now let us see when the data came, what happened on 21st. The price rallied a little bit, and the next morning also price rallied. Now in the EIA data there was no draw, there was build. So in the evening price has rallied in expectation of that the price would be, inventory would be draw. Now in the evening EIA data shows that there was a build actually. Crude oil, distillate and gasoline, there was a build. See, this is the 8 p.m. data. The data came and there was this drastic fall, 56.42 to 55.45, which is 2%. In MCX terms, I am showing you what happened. In MCX terms, MCGBC1, this is of 21st. Now, let me look at the PPT here and show you what happened on 21st. See, this was the crude oil WTI. The data, API data came here. Now, when our market stopped at 10:30, the price was here. Now, what happened before the API data? The price came down, and on API data, the overnight price moved to here. Next morning, we went the market, Indian market open, and when Indian market closed, WTI price was same, and we can see on 21st there was not gap up. But as the overnight data showed, again I'm coming here, that there was draw. So there was a bullish movement into the price. Overnight data showed draw, and there was, that is why price was bullish. So even if we have not traded all day on data, when the data showed that there was actually a build, inventories had increased, data was bearish. After the first candle, I could have easily sold, and see there was a 50 rupees down move, and similar thing happened in the WTI also. Let us see the previous week data, and I will take all the questions after I complete this inventory. See, let us look at the API data. Overnight data came 6.1 million build. So inventory has increased in the overnight data 6.1. This data I don't find completely into the investing.com. So what I do, I have to go to the next morning. So this was 14th. So 14th August 2000, 14th August, API inventory data, oilprice.com. If I search like this, the next morning I get the report. As this is quite, this has become 14 days, it is, I am finding it little difficult to show you this data, but I will still show it. Oil price dot, this is oilprice.com, 14th August, API inventory data. See, this is the report. Surprise bill. See, crude inventory went up by uh, sorry 3.7 million barrel. So I have jotted down this data the next morning. 3.7 million crude and the other figures have jotted down. So 6.1 million build. What happened? This is WTI. Market was open, our market was closed. To this data, market reacts, it comes down lower. ठीक है ना? And actually, the price to this bearish data, as it 6.1 million is big build, it had not fall, and our market opens somewhere here, gap down, but still there was a selling opportunity. Now, in the evening, what happened is that the EIA data was bullish, but still it fell. Why it fell? Because on this 28th August, what happens is that there was a sorry, on this 14th August, there was a Trump tweet. If you go to, so it was not EIA data that was driving the market, it was a Trump tweet. But as you can see, the previous week, when the inventory data actually showed a draw and market had rallied, and the evening inventory data showed a build, how market has fallen. This week also, as you can see, when the API data came and the market had not rallied big, even after gap up, we could have bought, and as our data was in line, not higher or not lower, the market sold off after this. So the point is, if the evening data is bullish and our overnight data was bearish, market would rally after EIA data. And if the evening data was bearish and in the overnight data was bearish and the evening data is bullish, comparison to this data, there is a trading opportunity. Now I will take as many of question right now and then finally move to the technical strategy. So this inventory play is very important, and 60% of the time it gives you very good trade. Like this week it gave very good trade. Evening data was bullish, market rallied. Overnight data was bullish, and evening data showed build up and market slided down. But obviously, if there is Trump statement or China statement, we have to look into that because those are the bigger thing trade wars. But this is the way market behaves. So right now, I will start taking questions about the inventory play that comes every Wednesday. Questions. Yeah. So anyone having any doubt regarding start putting questions I now, because if you have put questions also I have missed it, so I will take questions from here. Mm, yeah, finally the technicals are coming. Yeah, the questions starting from here. See, evening data bearish bullish means is Santosh Das. Simple. Look at this Excel. Whatever data is coming at 2 a.m., I have no control on this. On Wednesday morning, what I am doing is that is coming when MCX is closed. So immediately after the data comes, I cannot react to this data, right? But overall this week, 4th August, this is 14th August week, overall crude oil saw draw of 3.4 million and others distillate saw build and the gasoline saw a small draw. So overall, if I sum all of these three, so I am summing these three. If I total 2.4 million draw. So inventory is coming down. So this is bullish, right? Let us look at the chart also. So how the market behaved on 24th August. When the data came, this is WTI chart. I am coming to the MCX chart. See, this is the time when our market closed 11:30. 11:30 our market is closed. At this point of time, at this point, our market is closed. At 2 p.m. our market is closed. Data is coming. WTI is coming to the level, same level where we closed, and this is where we are opening. So our there is no gap because yesterday we closed here, we are opening here. Now during the day the market rallies because the overnight data saw that there was a inventory draw of inventory. Now in the evening the data comes that overall, though there was crude oil draw, but distillate, diesel got built and gasoline got built. So that means what? Crude oil was consumed by refineries. They produced this much of distillate and this much of gasoline, but they were not actually sold into the market. They added into the inventory. So whether the oil is in form of gasoline or diesel or in form of crude oil, we look at the total inventory. The total inventory was 0.21 million build. So in the night we had bearish, in the evening we had, in the night we have bullish because there was draw, in the evening there was bullish, there was bearish because we had a build. This is bullish data as there was draw, this is bearish data as inventory increased. And see how market behaved, both behaved same because both market has opened in the evening, because at 8 p.m. the market fell down sharply in the WTI also, and in the sorry uh, in the MCX also. You can see if I shut it down from a level of 4980, sorry 394050, it went down to around 3990, 60 rupees move it gave. So even if you have taken in a mini lot also, you had gained 600 rupees. Even if you had taken in a full lot, that is the 100 barrel lot, you could have still earned quite a goodish bit of profit of 6,000. In mini lot 600, in the big lot 6,000. But trade after at least 10 minutes is passed, because what happens is that as the inventory comes, there is huge volatility to allow 10 minutes for market to cool down. Even after that, there is big enough move that will unfold. Okay. So more questions. Any more questions regarding this? EIA data is negative, market is bullish. Not necessarily, Murthy sir, because EIA data shows a draw is not sufficient. If overnight, suppose overnight we have seen 10 million draw. Now in the evening EIA shows 6 million draw. Then though there is reduction of inventory, but market has already adjusted to 10 million inventory draw. Now it is having 6 million only inventory draw. So 6 million draw is less than the 10 million market has already adjusted to. So market will eventually correct. Basically, market in the EIA data compares itself with whatever data that has come in the API in the 2am. Can you making a living trading crude, gold and copper? Sir, in the TMP program that we are there, we are trading, and almost 7 to 8% we have made last 3 months. So we are trading together. I and I'm trading, and my mentees are also trading there. We as a group have been trading, and this program has been launched for four. I have been making trading for much longer, but we have launched a program also in form of TMP. We trade whole day from 9 a.m. start to the almost 11 p.m. in the night, and we have been making a money. So last 3 months 4 months we have been making a money close to 8 to 10%, and we are proud of it. Not every month we will be making same money, but some months can go down a little bit lesser also, but it is very safe to say that if you are disciplined and maintain stop loss, you can trade and live for that. Abhishek Mukherjee. Can you please show again how did you sorry, calculate petrol and distillates? Easy sir. देखिए, एक तो मैं डेटा देखता हूँ. ओके, दिस इज द डेटा दैट आई गेट ओवरनाइट. ठीक है, आई एम टॉकिंग अबाउट 14th. They are showing 13th because it is their standard time. In India it is 14th. Okay, because their day is still running that time. When India, it comes at a time when India has moved to 14th, but they are running in the previous day. That is why it is showing 13th. So I go next morning and look at this, put this data manually. So what I can say, inventory build of 3.7 million. Okay, so crude oil build 3.7 million. Okay, same data. I scroll down. Distillate inventories fell 1.3. So there was draw of 1.3 in distillates. Let me enlarge it a little bit. Yeah, so crude oil bill 3.7. Distillate, I saw 1.3 million draw. ठीक है? Minus 1.3. Gasoline, again 3.7 million build. You will find that day. So yeah, 3.7 million barrel increase in gasoline inventory. So I manually picked that data and put here. And this is the sum of all these three. Okay. Next evening, EIA data comes. So EIA data, how I do it? I have this economic calendar page ready in front of me, and the economic calendar, as and when it becomes 8 p.m., that second it shows me three data: crude oil inventory, weekly distillate inventory, gasoline inventory. I put these three data here. This was last week. See, I have put and sum them. The formula is already there, it automatically sums. So what I see, that the evening data, if it is bearish or bullish. So the color was here. Wrongly put. 1 second. So if the difference is in negative, like overnight there was a build, evening, these formulas are already put into my Excel sheet. See, now what happens is that in the evening there was some, in the night there was some data, EIA data I put. If the number is negative, then data is bullish. This data I have put, this data I put in the evening. If it comes as positive, the formulas are already there, then the data is bearish. This data was bearish, and that's why market fell like this. So this is a clear inventory play strategy that succeed at least 60 to 70% of the week, and these are very easier and almost, if you pay a little bit of time, these are very easier trades to done and no brainer kind of trades. Okay, so take more questions. Any more questions here, or I will move to the technical strategy? Any more questions here? Just put, please let me know, because inventory play is a quite easier play. We should be able to play it. Draw means drawing. So if you draw from your savings, what do? You then spend your savings. To draw means inventory is coming down. Okay, Santosh Das ji. Any more questions regarding the inventory play? Please put forward. I will have the latest question at the bottom, I think, right now. TMP we will cover at the last. How to take position and how to place stop loss. Yeah, I'm coming to this. See, when you take a position, your stop loss should be 20 rupees and your target should be 35 rupees. And after 35 rupees target is reached, the 35 rupees is almost 0.8% in the market, and 20 rupees is almost 0.5% of the crude oil contract. So basically 20 rupees should be your stop loss when the crude is running at 44,000 rupees per barrel. So 0.5% should be your stop loss. So suppose crude oil tomorrow goes up to 100. So always keep 0.5% as your stop loss and 0.8% of the contract size as your target. And if your target is reached, book half of the lot and then put a trailing stop loss. Like if you have bought suppose at 4,000, it goes up to 4,035. You raise your stop loss to 4,020 and book half lot at 4,035. If you are trading in mini lots, it is easy to have 4 5 mini lots, book 2 to 3 lots there and trail, because sometimes it is not 50 60 rupees move. Sometimes you get even 100 150 kind of move if there is a very drastic inventory data. Okay. uh, Nobendu Shah, would you please provide the Excel? Okay, I will provide the Excel also, don't worry. This Wednesday data and API and EIV will be good for trading on the Wednesday. What about other days of the week? That is coming for the technical setup. Mayur Mehradi, please wait. I'm covering one by one, so it will take time. That's why we have requested you for 4 hours of your time, sir. Technical, I will just cover right now. And maybe 10 20 minutes I will take your question extra also, because technicals would take maximum 15 20 minutes right now, and then 40 minutes is open session, ask any question. What should be the entry timing? Entry timing should be at 8:10. Don't trade till 8:10. At 8:10 take entry. Okay, this is Virendra Ghateji. Average 4 week is why? Average 4 week is why 2.57, since API data is negative and EI data is positive, so net change is this. Yeah, this is like, no 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 सर, ये देखिए इवनिंग में ये आया था, रात में ये आया था. So I am taking the difference, I am not taking change in inventory according to the EIA is this, and this is final. This is not change in EIA data. What I am calculating is the difference between this data. The bigger the positiveness is, more bearish the data. This data is insignificant, and the bigger this negative is, more bullish is this data. You understand? But sometimes market go reverse also. That's why keep a 20 to 22 rupees stop loss. That is half a percent stop loss. But I am only calculating the difference. Okay. Bullish 6.1 not. Plus 6.1 is bearish because inventory is getting built. Pando Pendota Venuji. So basically inventory getting built is bearish because, see, in a market, if the supply of fruit increases, fruit prices is grow down, right? So this is a decline, this is a bearish point. But if the inventory is decline, this is a bullish point. Please show entry and exit in the chart. I showed you the entry point is after, see, this is 15-minute chart. If you put it after 8, enter at 8:10, you might have entered somewhere around here, sorry, somewhere around here, 4050 after 10 minutes. So let me show you in the form of 5-minute chart, you will understand. Let me show the MCX chart itself. Let me show the 5-minute chart, and let me please go to the 14th August. Okay, 26th I'm traveling. 14th, I have to go back. 14, I have to go back. 14, I have to go back. At 8 p.m. Okay. See, this was the data 14th. Okay. Uh, yeah. This was the first candle. This was the second candle. We are entering at the beginning of the second candle. So we are entering somewhere 3931, 3953. It just went to that level. Okay. And then it fell. So maybe we can keep our stop loss 1 or 2 rupees higher, and 2025 I said the stop loss. And in the lower side you can see it went at 35 rupees we are booking. So 3830, 3930 to this 95 it is coming. We are booking half lot, and half lot we are trailing, and first lot we are booking 35, and then we are trailing stop loss. So we may book out here, we may book out here also, based on the trailing stop loss we have done. Okay. Is there specific time for more movement in the crude, say around 5:30 to 6, 7 India? That I am coming to, sir. I am coming to regular trading. I am coming. What is the time frame and lot size? Lot size is 10 barrel or lot size. Will there be any failure of trade? And see, lot size is 10 barrel lot is there, 100 barrel lot is also there. ठीक है ना? So mini lot you can do, or you can do a bigger lot. So for beginning, I would suggest you do mini lots. Were there any failure of trade? Failure of trade can be there, but I cannot. Aditya Soni, you are again and again posting the wrong thing, sir. This is not the difference. I am telling that these are the difference between the two inventory. So what I am doing is that from the evening inventory, I am uh, subtracting the I am subtracting the night inventory from the evening inventory. So it become 2.247. I will share the Excel sheet with all of you. You please then check, and if you have confusion, please get back, sir. Your calculation is wrong, sir. Is there any material available for fundamental for crude? I think whatever I have covered, if you can assimilate that, that would be more than enough, sir. And if you have to track of this information day by day. Mini lots are discontinued from December. Yes, correct. Till December you can continue with mini lots. After that, mini lots are not available. Is there a data published? OPEC data are published monthly, but inventory data, this is weekly inventory place. Every Wednesday the data is published. Pushpender ji, I am coming to that. What are the positional setups? I am coming to that. Aditya Soniji, why you are putting the same thing again and again? Your calculation is wrong. I have explained you twice, sir, but you couldn't understand. I am saying I will share the Excel sheet. If you have any after Excel sheet, if you don't understand, you please write me a mail. You will understand where you are going wrong, sir. It is like spamming. Like every 3, 4 message you are putting the same message. I am telling you, sir. We will send you. Can you post important links with description? That is already there, sir. In the investing.com I showed you. Please note it down when you go to the investing.com. here you need to see the news, and I right now need to go to the uh, technical part. See economic calendar, and in the economic calendar you will find this inventory reports every data into Wednesday. Okay, great. So inventory play I think should be cleared. For those which is, if there is doubt remains, we will take in the last half. Last right now, let me move to the technical setup. See some very basic thing I just want to say. See this crude oil is a very trending. So nothing works in it better than normal trend lines. If I see a crude oil chart in a longer term, this is the crude oil chart, and this is the crude oil chart, and these are the technical setup that I will right now show you. And I'm looking at daily chart. Okay, and I'm coming to CL. See, there is nothing bigger or better in this market than a trend line. See, simple thing you have to understand. Earlier, this was a very good support area. The moment this area is breached, it is falling like a stone. So until and unless this trend line, which was initially there, is breached, I would understand from this point to this point, this is clear sell on pullback. See, small pullback this is giving intraday, clear sell on pullback rally. Now there was a congestion zone. Once it gets broken, it is falling like this. And once this trend line that we formed, let me draw the color as blue and thicken it a little bit. Once this trend line is broken, I can be understanding, and when I'm seeing that price is moving in a trend line, I'm not talking about this portions. Okay, this portion maybe still early days, but when prices started moving in a trend line, this kind of part of the move I can be easily play based on the trend line. And when it has broken down, see this trend line, and it has started falling based on again this range being broken, I can play. These are general, this is not the strategy is coming, this is the strategy. So these are the general points I'm taking, and many trades during the day based on fundamentals, direction of the market, and the fundamental data releases, and the technical direction of the market, many a times we take during the day. Now, generally, crude oil has very high volatility. See, these big days are of 5 to 8%, normal days are 3 to 5%. Now, when the fundamental is bullish and also the technicals are bullish, we can have this kind of rally. When fundamental is bearish, technical is bearish, we have this kind of rally. So, positional trades should be taken in these scenarios only when there is clarity. Right now there is no clarity, there is a two complete opposing force, and see the market is range bound little bit in last couple of months. Why? Saudis are trying for IPO to push the price higher, global economy is slowing down due to trade war, and that is why this kind of a movement is there in couple of weeks, but still we can trade based on the news flows and the inventory that is coming, and on the technical strategy that I'm going to give you. Technical trading setup. This is on 15 minutes chart. I'm right now moving to the technical trading setup, and I'm looking to the 15-minute chart. And I know a lot of you would be more interested in this. So please try to understand what we are doing. First, what are the ingredient of the strategy? We are taking RSI of 14 period and we are taking stochastic 14, 21 and 14 period. So how to do this? You go here, if you have a scanner also you can build it, but I don't know how you can get WTI chart in particular scanner, but I am showing you if you want to do it manually through investing, how can you do it. So insert indicator, if you indicate RSI, RSI would come. If you insert indicator, another indicator, stochastic, see 1413 is the default. What I am trying to do is 14, 21, 14 I am typing myself. Done. Now what I am trying to do is I am drawing a line here which is at 50. So I am drawing a line here, putting a coordinate at 50. I can change the color of the line also. Like I will make it blue and little thick so that it is visible to me. And coordinate is 50. I have done this. In the stochastic 14, 21, 14. Please remember the setup and anyways you will get it. I am drawing two lines, 70 and I am drawing a line which is 30. I'm sure that this will going to quench thirst of many of the traders who want a short-term trading strategy. And this is a very effective and successful strategy, and I'm going to 15 minutes chart, will understand. So I'm going to the previous window where I have already marked the recent buy and sales which has come. Now understand when we are taking the trade. Let me talk about the bullish trades first. So what I am doing is that I am putting it a little bit on the side. Now for bullish trade, I want this kind of a situation. When the percentage K line, that is the blue line, crosses the red line, the percentage D line, while it is below the 30 mark of the stochastic. Stochastic is 14, 21 and 14. Okay. And after this, before any crisscross having, like I'm telling, suppose this has crossed and then again a crisscross and then again a crisscross. I am not going to buy these things. I am going to buy after the cross of stochastic has happened below this 30 line and there has not been any crisscross, like in between percentage K has not gone below this percentage D line. Understood, sir? Now basically when after this has happened, after this has happened, after this crossing of line has happened, I am looking the market vigilantly and I am looking for an opportunity when the 14 period RSI on any particular candle is crossing 50 mark. At the beginning of the next candle, that is this candle, let me enlarge it more. So this cross is happening in this candle. So at the beginning of this candle, I am going long. Now I will be definitely using the the MC the WTI chart for this. As I said, our charts are incomplete. Don't please use them. Now you see a buying signal generated here. You go to your terminal, whatever price USD INR converted price you get, you buy here with a stop loss of 20 rupees and target of 30, 40 and 50 and then trail. So basically once you got here, your stop loss is 20 to 25 rupees based on the volatility. If market is very volatile, keep it 25, but if market is steady like this, keep it 20 rupees. As soon as 30 rupees is reached, put book half of your lots. If you are trading 4 5 mini lots or 6 mini lots from for the beginning, book 3, and for other lots put stop loss 15 20 rupees above your entry price and keep on trailing if you can capture a larger move. So this I will show you, I will show you that how it has performed in recent past. See, this was one buying opportunity that came on 29th and it has went max. And if you want to see how it performed in crude oil, MCF crude oil, MCGB-C1, let me show you also. So sir, what was the time here? The time was 12:15, right? In the noon. And the date was 29th. This was the entry point. 4007, it went to 4083. So such larger moves can often come, and that is why the trailing stop loss is there. The previous buy had come on 27th, and see why it has come. Let me explain to you. The blue line has crossed the red line here, and now the RSI is and there has been no crisscross. See, we are not entering here, though it could have been great trade, but we are not entering here. We are restricting that the cross of K and D should have below 30, and then there should have not been any crisscross. So we are already entered here. Price kept us waiting, and towards the end of the day, it rallied much. It rallied huge. So let me show it in the MCX chart how it plays. See, this was like this. 3867 we 3870 we it went down 30 rupees by the end of the day. 3915, around 50 rupees up move by the end of the day we could have. And in between the day also we had around 3911 from 3870. Let me look at the other buy trade I had in recent past. This was on 22nd and around the time of 115, 22nd 115. So around this time in MCX 115, no, 1230, 115. So I went long at on, I could have went long around 4011 and I could have reached around 4063, right? There might have been few failure also. This was the buy trade that happened on 20th. I think there could have been few failures also. Yeah, this sell trade might have failed. I will look at it. Uh, no, this was not fail. Was success only. The sell trade is completely opposite. See, once the blue line crosses the red line above 70 and the RSI crosses 50 down, I short. So here I shorted at the end of this candle, not this candle. I shorted at the end of this candle because at the end of this candle RSI is crossing. And see 55.85 to uh, 54.98 on 22nd. This happened in this candle. 4026 to 3964, almost 60 rupees. Okay, this one failed. Why it failed? See, this was a buy trade and this failed. This was not a sell trade. Yes, this was one buy trade fail, because I want to show you failure also, because don't get into an idea that every time you will make money. Okay, this is a good strategy. This is a very good strategy, but every time it won't make money. See, the percentage K cross the percentage D and the RSI cross 50. You could have gone long here, again 26, and your stop loss would have been hit. 22nd. Okay, we were saved because at 3:30 our market was closed. Okay, our market opened here. So as US hours was there, MCS was closed. We didn't have this trade. This happened at 3 a.m. night. You see, now we saw this short trade. This short trade, let me see, because this crossover happened here and percentage K and this RSI came down here. So I was short on this 56.22. This was 21st. Yeah. So I was short on this candle 4036. 403, this candle 4036. It took my stop loss. So this was actually not success. This was actually a failure. So it failed a lot, but anyhow, it went up 26 rupees. So certain times luck is bad. 56.20 to 40 cents it went up. It took our stop loss, but you could see that eventually it failed. But in many of the cases, these were success, these were success, these were success, these were great success where we could have got very big moves. So this is a technical strategy. You would get around 10 12 trades in a month, which is on an average, and if you include that inventory trade once in a week, that is huge number of trades during a during a month, that is 18 20 trades. But apart from that, you want to trade, I have given you fundamental data like GDP data, the Trump comments that keeps on coming, and based on that and based on simple technicals, you can take some trades. Like if I look at the hourly chart, see what can strategy can you apply. You can see that this 5650 is a resistance zone for quite some time, 5650. So whenever price is coming no, let me show the other chart, you will understand. So you can see that 4050 60 is a resistance zone uh, in crude oil for quite some time, and the factor is that you can sell here based on some candlestick or some moving averages. You can do that. These are simple technicals, but if you want definite trading strategies, I have given you a couple, and I will give you a bonus also after some time. But let me take some questions, maybe 20 minutes from here, and I will show you a small trick and end the session. After that, maybe we can carry, or let me show the trick itself right now, and then we can move to that trade. See, what I have seen is that I am inserting two different indicators, and I am not included this in my presentation. Sorry, I am using one indicator only, and that is super trend and 9-2. Those who are looking at very long uh, trades, those who are looking for very long swing trades, in 4 hourly chart it works beautifully. You will see, try to understand. Whenever, and when we are talking about 4 hourly chart positional trades, try to understand our stop loss is around 60 to 70 cents. That means in MCX that boils down to about 50 to 70 rupees, 50 to 60 rupees, and our target is minimum 150 to 200 rupees. Let me explain in the terms. So once the price is broken below the 9-2 super trend, if it is pulled back pulled back within 30 cents of the super trend line, you just short it with a 50 to 70 cents stop loss. In MCX terms, as it is 4 hourly chart, you can put direct MCX chart also. So MCGB C1, once it has gone below this period, once it's pulled back, you have you enter 15 rupees 20 rupees below this line, because not necessarily it will always pull back to this line. So below this 9-2 super trend, once it has gone below for 5-7 candles at least, once it pulls back close to 20 rupees of this, you short here with the stop loss above 30 rupees above this line, and see from 3909 through 3640, 250 rupees it has went down. If you had entered here 3967, it went to 4096. So around 130, 150 rupees you are getting. Right now, when it fell, see 3951, 3920, see 30 rupees it went down. If exactly 30 was your stop loss, you might have been hit. But the factor is that, okay, we cannot save, but eventually when it again went up, you could have gone long and see 39482 to 43979, it had already gone. See this shorting opportunity, it pulled back within this range, you could have shorted for positional traders with a 50 rupees kind of a stop loss, and see 3986 to 3851, 130 rupees you have got. These very big trades you have got. I can show you multiple times you could have seen this kind of trades. If you have 50 rupees kind of a stop loss, like you enter 20 rupees below this line and put a stop loss 30 rupees above this, many a times you catch very big moves. So that is the way overall you can take positional trades into. So I have given you three concrete strategies. One is in 15-minute chart, one is inventory play, and I have shown you how to trade positionally. See, once it went above this line, once it's pulled back, you can see kind of rallies. Yeah, but sometimes you will fail when the tide will turn, and in 4 hourly chart, tide will not turn every day. Suppose you had gone long here, your stop loss is hit, but again it pulled back 4011, 4122, sorry, 4111, 4125. So you could have shorted here and see the kind of movement it's shown. Here it was quite above this line. You could not have gone long here, I would assume. But whenever you get these opportunities, okay, you won't get more than 4 or 5 this kind of trades in a month, but if you trade them religiously, you will get quite a good amount of profit, I guess. Now I finished completely, and it is 3:55, but I know that there would be a lot of questions. So I around 4:20 we will extend this session to answer only this question. And I will just finish by taking 2 minutes. We have a see, even after I finish this, I can understand there is requirement of regular teaching and mentorship. So what we do in the trading mentorship program is that every day we are trading live into the market. We teach you psychologically how to manage your position, how to manage risk. We are trading index derivatives like Nifty, Bank Nifty derivatives, crude, gold, and silver in this program. So where you get to talk to your mentor uh, directly if you require, between 3:30 to 5:30 in the evening, and you get 12 live trading sessions. And apart from that, through a WhatsApp group that we have, uh, I think I will show you the WhatsApp group. So these are the TMP groups where we discuss about the trading ideas during the day. putting our charts, putting, and here is the where you can in the live market also ask your question. We run this program in the chart, so you see that we have been running this program for last 4 months, and as I said, uh, August has finished, and last 4 months we have generated more than 8% kind of return in this program. There are a lot of people who have started as a very novice and become quite good trader into the market, and you can see that full day from morning 11 to night people are taking positions, and we are discussing positions here. So this is our trading mentorship program. If you want close guidance about trading, you can join, be part of it. We have started it 4 months back with a batch size of 15-20, and with 4 months we are around 70. And we want to keep it limited. We won't be growing it. We don't think we would be going it very big. So after some time, we would be closing admission into it. See, that day I said that the reports are there. This is deep, is me, the moment this oil, this China report came, and I said that this can fall 5-8%, 5-8%, and the gold and silver, and I will show you the way gold and silver behaved that particular day. You will be seeing gold and silver. If I go to the daily chart, this is the day when the news came. uh, 18.8, from 18.8 to it almost it crashed 4% on that particular day. So we keep on if you see think that as an individual, as a new, you are not able to manage this huge amount of data, you are not able to manage this huge amount of information flow, and it goes above your head initially, at least to manage. So this is a 12-month program. We can join us. You have learning if you don't know technicals and derivatives also. So there is live derivative classes of Chetanji that we will have. Recorded technical modules are there, and also we build trading algorithms here, and we trade based on that. So I will show you then each time the data come, like yesterday this data came, so I explain how what this data means. So as I read here from here, let me enlarge. China manufacturing PMI dipped again. Manufacturing accounts for 40% of Chinese GDP. Bearish for base metal like copper, zinc, and iron. However, service account for approximately half of Chinese economy, approximately 52% actually. And service PMI is surging to 53.8%, actually helped composite PMI to remain 53, a touch lower than 53.1 of last month, but does not trigger recession fear yet. Mixed for crude, like not bullish or bearish in any sense. Crude, it can be both way, because the services PMI has gone uh, up, but because people dive crude, so if service is generating employment and people are getting employment, then crude oil, it is not bearish. But yeah, for base metal it is definitely bearish, and mixed and slightly bearish for precious metals, because uh, the overall PMI coming up is GDP, how it is affecting the our overall scenario into the market. So this information, as and when they pour in, we analyze the data and put here. And I also myself, some of the trades I take, I shared with the group, and Chetanji also trades. So we keep on trading whole of the day. So if you want to join, just in case if you want to join this mentorship program, you can contact Orpon here. The links are there. So this is the way it goes on. You can contact Orpon in this number. And the best part is, if you join in TMP, you can deduct the cost of this webinar from your TMP, and you will get the normal, that is the discount that is going on, but you can get an additional 2000 rupees discount on behalf of this. That's, you can deduct the cost of this webinar, because this webinar is free for all our TMP members. And similarly, we will be having on base metals, we will be having on uh, precious metals, this kind of webinars. We will be having natural gas, this 1000 2000 rupees webinars full of details, those will be free. So you can detect this webinar, and rather than subscribing to this webinar, if you want to trade them in future, you can do this. So I am finished, and thanks a lot for being patient and being with me for this long. Right now, I would take your question for next 20-25 minutes. So please go ahead. The floor is yours, sir. So I am not going to the past question. I will take question from right here. So one by one, please freeze your putting down question. Please, from four I am taking the question. Please freeze. Let me finish these questions, and then please put forward your question. Please give view on employment data, also gold data. Gold data. See, gold we cannot cover in this. This is a very big topic, like 3-4 hour topic. I cannot cover totally, but I said that gold price. If please stop putting your questions. Please let me answer this many questions. Then please put forward your question. Please, I request all of you. So, Shantoshji, uh, if the employment data, if the employment generation is less, then that is bearish for economy. That actually is bearish for crude oil, and if the gold prices are going up, that is generally bearish for crude oil. Okay, please don't pour your question because I will miss track. Once I finish answering this question, please put new questions after that. I will answer everybody's question. Please wait. uh, 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 Hello Deep, any need to please don't put forward your question. I will miss track. There are so many questions. I will take questions afterwards. Please wait. So any need to look at the volume number of, because no, these are global commodities. So whatever volume in India, we don't need to put significance. Devang Nayak ji. Okay. How can we do options? Sir, this is beyond the scope of this webinar, because I purposefully avoided the option part, because I know that there would be a lot of people who would not having basic understanding of the option also, and that is why not giving a detail about option. If you want to do options, so this is similar line. If market is bearish, you can put bear put spread. If market is bullish, instead of buying in future, you can go for bull call spread. ठीक है. Santosh ji, thank you. You said welcome, sir. Srinivas Murthy ji, how to know trend reversal, strength of the trend in the impact of USD? Sir, trend reversal, whatever trade strategy that I showed you in 15 minutes chart is basically based on the trend reversal only. You can utilize that. Is there any impact of USD INR increase and decrease? Yes, obviously. I said you, I had explained this. If rupees is 60 and $60 per barrel would count to 3600, but if rupees is 65, USD INR is 65, then the price becomes 3900. So if rupee is weakening, crude oil prices would go up. Is there please stop putting your questions. I will ask you, then please put your question, because I'm losing track, because this will overflow right now. Is in crude trading, can you lose more than what you invest if there is a system failure? System failure means if your computer failure. See, the day before yesterday, what happens is that suddenly my net connection collapsed, and I took a trade, and I was about to put a stop loss. So if my system failed, I lost a lot of money, because I had earned a lot of money since the morning. But what happened is that my system failed, and I lost money. So system can fail, and if your trading system fails, yes, then also you can so that is the way we are saying that this is a model system. You can apply it, you can modify it, you can experiment it. In the TMP, we do this trading strategy simulation through Fox Trader, through algo trading. So we keep on experimenting with our strategies. That's it. Now, what is the time frame? Next question from Virendra. What is Mr. Farid? What time frames can we apply? Sir, I showed you two time frame. One is 15 and one is 4 hours. So there can be trading strategies in other time frames also. I showed you two. So there can be similar 10 strategies. So I showed you a couple of things, try them, and if you can build a better one, that is great. Please don't pour more question because it is running upwards. I am trying to answer as many questions as possible. I will answer most of the question. Sir, what is the most volatile time for Indian market in crude in intraday? See, the most active hours is between 6:30 in the evening to 9. Okay. Mahendra and Mathuraj, get great session. Thanks a lot. Welcome, sir. In crude trading, can we lose more than what I have already answered? Krishnan Narayan ji. Brijesh Singh, can we add the more indicator just as a volume? Sir, you can take your trading decision based on 100 indicators also. There is no limit to it. So this is what kind of question, I don't know. You can, if you can take it a simple decision, simply simplicity matters. But if you want to make a more robust, if you're adding of indicators, make your system more robust, then please go for it. Nothing like a even robust system. Is there any impact of US INR increase and decrease? I just answer it. Please, if you missed it, you will get the recording. Please, I'm not going to repeat the answer. I just answered this question, sir. Conclusion क्या निकला इस वेबिनार में? ये तो सर आपको कंक्लूड करना पड़ेगा. सर फंडामेंटल इज कवर्ड, टू ट्रेडिंग स्ट्रेटजीज इज कवर्ड, our trading strategy based on inventory data is covered. So this is what I covered. Stochastic parameter, please, sir, this is available in the webinar 1421. 14 is the stochastic parameter. प्लीज रिटर्न माय मनी सर. ठीक है सर, आप बात कीजिए. क्या संकेत कुटकुटे जी, कुरकुटे जी, आप टीम से. ठीक है सर. कैन यू प्लीज टेल मी व्हाट आर टाइमिंग्स ऑफ ओपनिंग मार्केट इन द important countries? So different countries are different. US opens at 7 a.m. in the morning and completes as 2 p.m. Okay. Are you expecting Nifty to go down? Why, sir? This is not about Nifty. Join. I cannot do that, sir, in here. Please. Where I have to ask question? You have asked question here, Manoj ji. Devang Nayak Nayak. Okay, okay, okay. Okay. Moin Ansari ji, sir. Do you follow the same setup to take trade? Yes, I follow. Do they release EIA report before 8 p.m. and post 8 p.m.? No, sir. See, if there is a trading holiday in the last week, then what happens is that this API is reported on 2:30 in the night instead of 2, and the EIA is reported in the on Thursday 8:30. So half an hour later. So if there is a holiday in that week or previous week in USA, this happens. Veti Raghavan ji, thanks for webinar of crude oil trading cat. Options are even volatile to trade. No, option are less volatile to trade, sir. I often trade through options also. If especially I am not going to look at screen for quite a long time, I through option also. सर थोड़ा सा अब क्वेश्चन थोड़ा कम पुट कीजिए क्योंकि मैं मिस कर रहा हूँ एक्चुअली. I have lost track of question. I'm requesting all of you, because if you want all of your questions to be answered, please wait for a little bit for putting the question. If you keep on bombarding the question, I will not be able to answer everyone's question. So please wait. I will answer each one's question. Please wait. How is to put middle line in the RSI? Uh, Sir, I have shown it. Let me show it here, sir. Sir, कोई भी line put करना हो ना? Let me show it. So suppose I include RSI, sir, here. Sorry. So RSI is already here. So suppose I want to put, I click left side on this. Here I can change the color of the line. Suppose I want to make it brown and I want to make it even thicker. I will go here and right now I put in RSI, and in the 50, the coordinate, if I click on the line, I can put 50, the line is drawn. Okay. Uh, Please stop pouring in question. I will ask, then please pour in question. Stochastic parameter, please. I have given. Open interest क्या नहीं cover किया? Sir, open interest is not required because we are covering the global commodity. India में open interest क्या है नहीं है कुछ नहीं जरूरी होता है. Stochastic, your fundamental session was awesome. Thank you, Vijay Kumar ji. Please explain Excel sheet. Excel sheet will be shared with you, sir. Aditya Soni ji. Stochastic parameter, sir. You will get the PPT. I have twice repeated the parameter. ठीक है? अमर जय सिंह जी. 14, 21, 14, sir. Stochastic parameter. Third time repeating. Best session ever on crude oil. Nilesh Deshmukh ji. Thank you, sir. uh, Moin Ansari, sir, any candle type we should follow with your setup? सर कैंडल टाइप देखिए कभी भी बड़ा कैंडल बनता है ना और रेंज से बाहर जाता है मोइन जी तो बड़ा मूव आता है. देखिए मैं आपको दिखा देता हूं एक चीज. क्रूड ऑयल ऐसा ही प्रोडक्ट है सर. जब मैं 15 मिनट का कैंडल दिखा रहा हूं सर आपको, ये देखिए ये बड़ा कैंडल जब बने ना सर और रेंज से बाहर आ गया है, जरूरी नहीं है कैंडल खत्म होने का वेट करे. इतना बड़ा कैंडल बन गया सर, बीच में भी आप एंट्री ले सकते हैं और उसके बाद काफी जूस बचता है सर ये मूव में. ठीक है मोइन जी. एंड I had lost 3 lakhs of brokerage last 2 years. Your strategy looks very promising and avoid over trading. Thank you. Welcome, sir. Please repeat correlation between copper, gold and crude. Sir, copper is an industrial metal. मतलब इंडस्ट्री में लगता है. कॉपर किस में लगता है सर? इलेक्ट्रिकल फिटिंग में, कार में. अगर इंडस्ट्री स्लो डाउन कर रहा है तो कॉपर कंजम्पशन कम हो रहा है तो कॉपर का दाम कम होगा. ठीक है ना सर? और इकोनॉमी स्लो डाउन हो रहा है कमल इसरानी जी, तो लोग डर के मारे गोल्ड खरीदते हैं तो गोल्ड का प्राइस बढ़ता है. तो कॉपर और गोल्ड का जो रेशियो है सर वो नीचे आता है. ठीक है? तो कॉपर और गोल्ड का रेशियो जैसे ही नीचे आता है, द सिल्वर सॉरी द क्रूड ऑयल आल्सो इन बेयरिश सेंटीमेंट मार्केट में फॉल आता है. आदित्य सोनी जी एक्सेल शीट है आपका, बहुत ज्यादा मतलब कंफ्यूजन है. आप एक बार एक्सेल शीट देख तो लीजिए सर. once you have the excel sheet, please if you have any question please write it down because I have explained it 3-4 times sir. ऐसे नहीं होगा. आप एक एक्सेल शीट देखिए उसमें जो फॉर्मूला से पुट कीजिए. सर इन्वेस्टिंग डॉट इज नॉट रियल टाइम. नो इट इज ऑलमोस्ट रियल टाइम सर. रियल टाइम WTI डेटा और कौन सा वेबसाइट में है मुझे नहीं पता सर. दिस इज माय बैंक अकाउंट. अरे बाप रे. हाउ विल द स्टार्ट द स्टार्ट हाउ विल बी द ट्रेड ऑन मंडे? सर मंडे का तो मंडे देखेंगे सर, और भी डेटा आने वाले हैं क्योंकि इंडिया का, यूएस का, सब कंट्री का PMI डेटा आने वाला है तो हम देखेंगे सर. और इंडियन इक्विटी मार्केट में यहाँ पे नहीं कवर कर रहा हूँ सर, हम देखेंगे उसका. Is the crude oil options liquid in India? Yes, sir. The even price, the 3900, 4000, 4100, these options are liquid. Please explain explicit again. Bank of Baroda, sir. Sir, as per your seasonal topping of half yearly bearing bullish, next half year should be bearish. Sir, next half year bearish होना चाहिए, लेकिन देखिए this year there is a special scenario that is सऊदी आराम को आईपीओ. $2 ट्रिलियन का आईपीओ लाना है तो सऊदी अगर बहुत जल्दी से बहुत ज्यादा ऑयल प्रोडक्शन कट कर दिया, जो कि वो कर सकते हैं टू गेट दिस आईपीओ डन, क्योंकि देखिए सर उनका एनुअल रेवेन्यू क्रूड ऑयल बेच के 130-140 बिलियन डॉलर है. यहाँ पे वो सिंगल गो में एक $2 ट्रिलियन का आईपीओ लॉन्च करना चाहते हैं तो दे कैन डू ड्रास्टिक थिंग्स लाइक कटिंग crude production a lot and then so till 420 all the questions are put, I will answer them. Rest please mail to me. तो सर क्या हो सकता है कि इस ज्यादा चांसेस है कि बेरिश रहेंगे सेकंड हाफ, बट नहीं भी हो सकता है, देखेंगे सर. एक्यूमुलेशन एंड डिस्ट्रीब्यूशन फेज. सर एक्यूमुलेशन तो बॉटम ऑफ द मूव में होता है जब प्राइस गिर गया है. सी दिस इज अगेन ये accumulation हो सकता है after prices dropped and prices in a range. Now if price moves upwards, इट इज एन एक्यूमुलेशन, बट सर क्या हो सकता है कि यहाँ पे कॉन्सोलेट करके फिर नीचे भी जा सकता है, देन दिस इज जस्ट ए कंसोलिडेशन। और डिस्ट्रीब्यूशन क्या होता है सर, ये तो डिस्ट्रीब्यूशन था, देखिए ऊपर गया और पुराना हाई रेंज के पास ये डिस्ट्रीब्यूट करने लग गया, प्राइस ऊपर जा ही नहीं पा रहा था, तो यहाँ पे बेचना चाहिए था। ओके। विजय कुमार, थैंक्स फॉर दिस सेशन, वेलकम सर।
So,
कैन
can
वी
we
शेयर?
extend the session for another 5 minutes to take up the questions, sir? Will that be okay for you?
Yeah, 5 minutes more. I will be answering the more questions by 4:20 to 23. We will do. Can you
Right, no
share one more
problem, sir.
intraday
Yeah.
trading strategy? Not possible right now, sir. I have given you three strategies. I think uh, you can join our program so that you can have our extensive strategy. मोइन अंसारी जी, रामचंद्र राउत जी को मैंने आंसर कर दिया सर। योर वीडियो इज ऑन यूट्यूब अबाउट इन विच taught about 45-55 band. We incorporate it with your crude strategy. सर ट्राई करके देख लीजिए, पैसा बनता है तो इससे बढ़िया कुछ नहीं। थैंक यू सर। आदित्य भदौड़िया, वेलकम सर। Sabri Girish ji, on what basis is the crude price in India on US holidays? सर यूएस हॉलीडेज में WTI क्या है ना, ग्लोबल मार्केट में ट्रेड होता है, जबकि रेंज छोटा होता है बट ट्रेड होता है, क्योंकि यूएस प्रोडक्ट्स आर ट्रेडेड इन क्रूड ऑयल बिकॉज इट मूव्स विद ब्रेंट, सो इट इज ट्रेडेड इन आइस एक्सचेंज। तो आइस एक्सचेंज में WTI ट्रेड होता रहता है, तो यूएस हॉलीडेज में उस हिसाब से ट्रेड होता रहता है सर। लेकिन जैसे क्रिसमस टाइप सिचुएशन हो गया जिसमें पूरा दुनिया ही क्लोज है, मतलब यूरोप भी क्लोज है, यूएस भी क्लोज है, उस समय इंडिया में सर क्रूड ऑयल मतलब नहीं, ऑब्वियसली क्रिसमस के टाइम में इंडिया में भी बंद होता है, सो लाइक दैट। वाइट वाइट ट्रू स्ट्रेंथ इंडिकेटर, ये क्या, मैं समझ नहीं पाया सर आपका क्वेश्चन। वाइट वाइट ट्रू स्ट्रेंथ इंडिकेटर हमने तो यूज किया ही नहीं सर। फरीद
So,
जी।
can you just name the the person who have put up that question, so that when you name the user, so then he can write again his question if he have any.
नहीं, आई सेड फरीद, मिस्टर मोहम्मद शेख फरीद। व्हाट इज ट्रू इंडिकेटर? सर आप एक बार प्लीज पुट फॉरवर्ड योर क्वेश्चंस अगेन, बिकॉज आई वी हैव नॉट यूज्ड सर ट्रू स्ट्रेंथ इंडिकेटर। अमर सिंह, नाइस सेशन, वेलकम सर। सबरगिरी जी सर, जब यूएस हॉलीडे होता है मैंने बोल दिया कि आइस एक्सचेंज में ट्रेड होता है, यूरोप में ट्रेड होता है। ओके। कृष्णन, great webinar. Do one gold and silver, sir, we will do in future, and natural gas base metals we will do. uh, Mohammed Rauf ji, welcome sir, if you liked it, thank you sir. uh, how to read sentiment during trading? So that is the whole day we teach, and I know that few people who are seniors, quite senior to me, quite in age also, but I have to be harsh on them in the TMP while they were trading relatively without stop loss or trading with emotions. And I am very thankful to them. They took it very positively. Even I was feeling bad that they are in my elder brother's age, or my uh, quite senior to me. I have behaving to them a little harsh way, but it was important for me to course correction of them in the way they are trading, and I'm very thankful to them. They have amended the way they are trading, and we are both happy that they are making money, and they are also happy that right now they have started entering into the profitable zone of trading. Vaiti Raghavan, thanks for the information. Okay, welcome, sir. Very exhaustive webinar. Devang Naik, welcome, sir. Virendra Ghate,
So,
nice session.
there has
Welcome.
a
Thank
question
you.
which has come from Mr. Mohammed Sheikh Farid. He was asking, why did you put on true strength indicator in chart in 15 minutes? So that was the question he was asking.
No, truth stand indicator I have not put. I have not put. RSI we have used. Truth stand indicator I have not put. This
All
is
right. So thank you, sir.
so I have not put true strength indicator. I have not put. I think there is some misunderstanding. Once he gets the recording, sir will understand that what we are trying to say. Okay.
Certainly, certainly. Yeah.
So if still there is doubt, please write to us, sir. We will answer. Uh, I will take 8-10 more questions, and I will have have to end it somewhere. 425 is the target. Investing
But
document
Mr.
delayed
Day,
site.
I would really appreciate the fact, that you have extended this session by 22 minutes and you're still taking up the question. I really appreciate the fact, and even our users are appreciating this. So yes, my dear listeners, kindly put up your questions if you have any, so that before we conclude this session, you can get the answer. But yes, do not get disappointed if any of the questions is not taken during the session. You can always put us the query to us on email at support@elonmarkets.com. So, sir, kindly proceed taking the question. There have been question coming. Yeah.
Yeah, yeah, please. Thank you, Swati. So, investing.com is delayed site, sir, but how else? Still, it is maybe 1 or 2, 3 second delayed, but sir, how do you get WTI price otherwise? Matlab, I can get it from Bloomberg because here, but Bloomberg, not everybody can afford. It is almost 20 lakhs, 30 lakhs rupees. I would say per year the charges. So not affordable as an organization. Big organization present can afford, but not every. And I also don't look at Bloomberg. I can, if I want, I can, because WTI, if it is coming in investing, it is not that much deal. Why long spikes come in? Because sir, on certain data, some Trump comments, something, what would happen is that the price would move very drastically. So those are the things. जीडीपी डेटा कौन कौन सा चेक करे? सर मैम ये लिख दिया है हमने. Don't worry, which countries you need to follow, that is in the PPT. So we will find, we can many after this webinar, hopefully, sir. And hopefully that all of you make money. Thank you very much, Srinivas ji. Welcome, sir. On what basis the crude is priced in India? US holidays, I have answered. uh, Sir, I have answered this twice based on European ice exchange. Please, Sabri Giriji, please follow my follow the recording. Time difference between MCX chart and WTI chart. There is no time difference, sir. Our market opens at 9 and closes at 11:30 at night, and US market trades till 2:30 and starts again at 4:30 in the morning. So they are trading 22 hours, or we are trading only 15 and a half hours. So can we get investment trading using the three strategies? How can we say news comes fast and then price action happens is crude and vice versa? Sir, news is always known to some insiders, ठीक है? So if Trump is going to tweet, Trump doesn't tweet himself, so it is always known to some of the guys in his department. If Finmin is taking a decision on Friday evening on bank mergers, don't you think that this is already known to some of the bureaucrats? So always in every country there would be some people who will having advanced uh, decision. I don't say that everybody is misusing it, but at times in certain countries misuse happens. So before the news, often price movements happen, and you cannot do, and that's why technical analysis is there. But see, the data is coming every week, this crude oil data, but still it is providing trading opportunities. So it is not that every time that you cannot price would action would happen before the data, right, sir? How
All right,
how to,
sir. So this the last question you would be taking of the session, sir. Please go ahead with the last question of the day, sir.
yeah. So how to correlate cruise price information data with equity market, sir? डे टू डे कोरिलेशन नहीं रहता है, ठीक है. वन मोर क्वेश्चन आई एम टेकिंग. कैन वी टेक डिलीवरी लाइक इक्विटी शेयर? नो यू. सर डिलीवरी लेके क्या करोगे क्रूड ऑयल का? व्हाट यू विल डू? 3-4 क्वेश्चन लेट मी टेक, स्वाति. Just 3-4 question. Can we practice
Any time for
market?
you, sir.
Can you practice market reply investing.com chart software? I am not understanding the question. Why do you entry level, sir? Should I get your contact number and mail ID? Sir, you mail me, mail the support. They will put your question, and once you revisit the website, you will find, revisit the webinar, you will find the answers. So I am find BT and STBT strategy. I am not giving for crude. Thanks a lot, sir. Amar Jaisingh ji, Yogeshwar Rao ji. 10 question. You are experienced, but you are irritating if you ask same question. Thanks a lot, sir. 100 question from sharing you. It is common because your experience and others now you need to understand. Okay, by I answered all the question. Uh,
So the last question let me take for you is by Mr. Kiran Sharuk. So he's
hmm.
asking, can I use 1 or 3 minutes time frame? So this will be the last question of the day, sir.
Sir, you have to devise your trading strategy according to that. I have
Okay,
not.
all right. So I think we are almost done, sir. Right. So thank you, Mr. Day, for the great session. I would like to extend my thanks to all the participants for
Yeah.
participating in
Thanks.
today's webinar. Yes, please know the recording of the webinar will be uploaded under elanmarkets.com on Monday, that is 2nd September, latest by 3 p.m. And we will also email you the steps to access the same, along with the presentation used by Mr. Day today. The email would reach your inbox from support at elanmarkets.com. And yes, as I told you earlier, do not get disappointed if any of the question is not being answered. In that case, kindly put your question to us via an email. Our email ID is support at elanmarkets.com, and the answer to your query will be emailed on 5th September, that is coming Thursday. Please note your feedback is important for us. So once the session is over, do not close the dashboard. A feedback form will appear automatically. Please do fill that. Yes, because your feedback really help us to grow. And yes, if you have any recommendation in terms of any speaker coming to our platform, you can always suggest. We will definitely try to bring him or her for the session. Yes. And yes, as you all know that I love hearing from listener. If you want to reach out, share your story, or just to say hi, shoot me an email. My email is support at elanmarkets.com. I would love to hear from you, and I read and respond to every listener email. All right, and before I end, I repeat it again. We Team Support believes our existence only because of each one of you. My dear customer, you are really important, and thank you so much for giving us an opportunity to serve you. So, goodbye, everyone. Have a great weekend. And yes, do not forget to give the feedback. Bye bye.
Thank you.